colleagues, please take your seats. We are on day number 3, and all of you, with us. So we started from those who just joined us today. We started with senior official workshop, which was quite interesting insights, and we get like developments, policy side. Then we moved yesterday, day number 2 with ministerial conference. And the reflection is that it's too broad, a lot of global developments, what's going on globally, what is the policymakers, ministers of finance reaction, next steps, talking about sustainability reporting, talking about digital. And now we're going to dig down into the technicalities. And today we're going just to talk about specifics which our leaders of this respective COPs are going to present. So for the welcoming and remarks and introduction of the day, I would like to pass the floor to and introduce Dan Boyce, reintroduce Dan Boyce, who is practice manager for Europe and Central Asia East and PULSAR steering committee chair. And Dmitry is leading the FinCoP, Financial Reporting Frameworks Community of Practice, and Jose, EduCoP. Just reintroducing. Dan, please.
Thank you, Arman. Good morning, everyone. It's nice that I don't have to say good morning, good afternoon, and good evening, because we're all here in the same place, in the same time zone. We've had a very interesting and fruitful last 2 days in the senior officials workshop and the ministerial conference, and now we're broken up a bit into the 2 groups, PULSAR and then the STAREP and Paris for SMEs going in parallel. So today, really for PULSAR, we're focusing on the consolidation of accounts and the experiences and updates in education standards in terms of accounting education, especially for public sector. So focused on those, the 2 communities of practice, but really on specific themes as well within those communities. I have to say, for consolidation, it's for a long time it's been kind of the headache, not only in terms of accounting, but just in terms of systems. The World Bank used to sponsor and support implementation of the IFMIS systems in many countries. We still do, but there was a kind of a boom in this for a while, and say 10 to 15 years ago. And usually the stumbling block or the hardest challenge was, it's okay to have a system and you set up all the accounts and so on, but then, we have to integrate, and these subnational governments, they don't really have the system. We haven't installed it there yet. Different ministries, maybe they accepted the system or other ones didn't. So first it was kind of a system issue, but it was mostly cash accounting, so it wasn't really an accounting issue at the time. So now we're getting into the accounting part, and it's kind of been building up for a long time. We've had requests from governments for help and some discussion on what are the issues on consolidation of accounts, and now it's under accrual accounting and usually under IPSAS that we're exploring this. So we've been able to move. Dmitry has delivered the paper that I assume will be presented in different ways today. And at the same time, we have one session with the experts on the topic, and then another to hear what's happening in the countries and where we are in some countries. And then continuing into EduCoP, similar, but focus more on where we are and some of the international education standards, and having some presentations and discussion on that, to then lead into a definition of the work program for both COPs, really. What do we have coming up? Taking advantage of being here in person to have some exchange of views on what should be the work program in the next, I'm not sure, 12 months, 18 months, as we continue with PULSAR. So with that, I'll continue. Do I go directly to Dmitry? And we will get started and have a little bit of an introduction before we get into the heavy substance. Thank you.
Thank you, Dan. Dear colleagues, good morning, everyone. It's really good to see you all finally in person. We've met virtually so many times during the past 3 years, but this is the first time face-to-face event since pandemic started. As you know, the main discussion for today is consolidation. It's one of the priorities areas that we identified when the FinCoP and PULSAR has been created. And we also discussed 3 years ago in the last time we saw each other that this topic would be the main discussion topic for the next event, which was originally planned, as you may remember, in Belarus, and then many things happened, and well, fortunately we are here, and our Ukrainian colleagues also were able to come and join us, and hopefully going forward we will be able to continue meet each other every 6 months in person, if nothing else happens. But in the meanwhile, let's get from the high-level topics that have been discussed for the past 2 days to a little bit more technical matter. So today, at least on the FinCoP side, we are going mainly to discuss the consolidation topic, but I know it's very challenging and relevant topic for most of us. As you know, many countries still struggling with the consolidation process because it possesses challenges not only from the conceptual perspective, but also from the IT perspective. So we have 2 technical sessions, many speakers that you already know. We will take advantage as well, as Dan mentioned, to present the main findings of the most recent knowledge product that was prepared as part of the FinCoP activities. The paper is still in the last phase of approval and completion and editing and design, but we're going to give you some heads up on what are the main conclusions, recommendations, lessons learned, country experiences. So we have a good first panel on the consolidation itself from different perspectives, including the government finance statistics perspective, and we have colleagues from the IMF here who is going to talk about consolidation, but from a different approach. Then we have a second session which will be more focused on you presenting your country's experiences, and we are going to have David, Ludmila, and Dritan talking about Georgio, Ukrainian and Albanian experience. And then we are going to have our colleagues from FOCAL. I hope you remember our friends and Forum of Accountant Generals of Latin America, who are very excited to participate in our events, and hopefully several of them will be also remotely connected. And Oscar Nunes, who is currently Accountant General for Peru, for Republic of Peru, is going to present experience of Latin American countries in terms of consolidation and also Peru consolidation, which hopefully will be also useful, interesting for all of us. Then we're going to have a lunch and then a short session on the for the EduCoP, and Jose will provide a little bit more details on that. And at the end of the day, probably we will have the most important session of today, and we were waiting for it for 3 years. And basically, we wanted to discuss with you what are your main concerns, what are your preferences, what are the discussion topics you would like to cover, and get into details within the next 1 or 2 years as part of FinCoP activities, how we can help you to ensure that you are involved, that you're actively participating in both virtual and face-to-face event. So all these, let's say, administrative topics we will be discussing this afternoon. So please stay until the end of the day. And later on, we will have a very nice dinner in a nice place with a great view. Hopefully it's not too late and we will be able to see Vienna.
The place that you personally selected.
Not personally, actually it was our Ukrainian colleagues who found it first, and they said it was a great place to go. So we will just follow the example. So it will be a long, intense day, but hopefully very interesting for all of you. And that's it for now on my side, and I pass the microphone to Jose.
Thank you very much, Dimitri. Well, first I would like to echo my colleagues on how happy I am to be in person here with all of you. As you know, I took over this program back in 2020, just in the peak of the COVID situation. And since then, we have organized over, I think, 12 or 13 interactive talks or virtual meetings. But this is, for me, the first time I get to see all of you in person. So I'm very happy for that. On the side of the education community of practice that I worked and jointly with my colleague Natalia and most of my colleagues outside of the Vienna office, we have been discussing thoroughly within the community of practice on which were the priority topics, and international education standards came out as a topic of relevance to continue supporting. So when we had the opportunity of organizing this joint FinCoP, EduCoP workshop, we thought that it would be very good to incorporate that to the agenda. But it's not an agenda that has started today, of course. We had this same month, last month, early November, we had a two-day workshop where we worked with our colleagues of IFAC and our own team to explain all the recent changes and updates. And we, in parallel, launched a survey to all our beneficiary countries to gather a sense on what's the status of the implementation of the international education standards country by country. So the results of the survey came out, we have them, and we will have the opportunity to discuss these results during the afternoon session. And as Dimitri mentioned, the key meeting of today, it's also to take into account that we are all in person and discuss the next 12 to 18 month work plan. So that will be the end of today's session. And of course, I'm really happy that we are all going to go to Kallenberg, to the restaurant in the middle of the mountain overlooking Vienna. I guarantee that it will be a nice experience. And it will be nice because we will all be together there. So don't worry, we will have good food, good drinks, and good view and good company. So that's it from my side, and back to Arman.
Thank you very much, Dan, Dmitry, and Jose. So in order to go to this nice restaurant, because I think the message you got from this opening is we are going to go to the nice restaurant, we need to deserve it, and we need just to deliver it. So let's then start with our first session, which is consolidation at different levels of government, good international practice. And this is going to be a unique chance for you to give your questions, because we will have very distinguished panel members. Please, I would like to invite our panel members to the podium, and thank you very much.
Thank you, Arman.
Thank you. I will use this opportunity to start introducing our panelists. Again, we are going to talk this session. Actually, we start receiving very challenging questions on the senior official workshop about consolidation. And Ross helped us to address those, but now this is the session where we are going to dig down in the, further. So I would like to start with Ross Smith, Program and Technical Director at IPSAS Board. With us, Sahed de Klerk, Senior Economist, Fiscal Affairs Department from IMF, and here where we're going to address GFS, also a question you already raised. Andres Bergman, I think everybody knows Andres. He's from PULSAR program, he's Technical Advisory Board member of PULSAR, the board which provides a technical high strategic advice to our PULSAR, shaping our PULSAR program. He's director also Department of Public Sector, School of Management and Law, Zurich University of Applied Science, and our strong partner of the PULSAR program. Thanks to Andres and team. Durlandi Andres Gubilos Marquez is a research associate from the Zurich University of Applied Science. And of course, Dmitry, senior financial management and leader of the FinCoP. Giuseppe Grossi is the top scholar, research professor of accounting of Nord University from Norway, and also professor in public management and accounting of Kristianstad University, Sweden. And of course, Thomas Müller Marcus Berger. I think many of you know Thomas. He's also Technical Advisory Board, PULSAR Technical Advisory Board member, and is audit partner at global head of international public sector accounting standards at Ernst & Young. He's also chair of IPSAS Board Consultative Advisory Group. Of course, Thomas has many more positions, I expect, but these are just only summary. So now I would like to pass the floor to Ross to proceed with. Yes, you can, as you wish. Probably there are more space.
And thank you very much for having me here today. My name is Ross Smith. I'm the Program and Technical Director of the IPSASB, and I manage the staff team in developing the International Public Sector Accounting Standards. The staff team for the IPSASB is based in Toronto, Canada, and I'm very happy to be here in person after attending many of these events online during the pandemic. It's great to see people in person and to join this event. 15 minutes is a pretty short time to talk about a big topic like consolidation, but I'll do my best to touch on some of the main concepts related to IPSAS 35, as well as the broader group of standards on accounting for interests in other entities. So I'm sure I won't be able to cover all the points you might have in the standards themselves, but there'll be a chance for questions following the presentations, as well as on the breaks. If you have any specific questions, seek me out. I'm happy to chat with anybody. So with that, I won't waste any time. Let's get right into the discussion. So as alluded to previously, there are a number of standards that relate to accounting for interests in other entities. I'll principally talk mostly about IPSAS 35 today, but it wouldn't be doing the topic justice if we didn't acknowledge the assessment of how to account for interests in other entities and the various different standards that apply depending on your ability to control your investment in another entity. And I won't go into detail on the various standards there because we don't have time for that today, but I did think it was important to just lay those out and highlight that depending on your circumstances, you'll have to make judgment calls based on the facts and circumstances of your investment in another entity to determine which of the standards to apply. We'll talk principally about control in IPSAS 35 and those entities that are controlled entities today. But it is important in assessing whether you control another entity that you look at the guidance in IPSAS 35 principally to help decide whether you do actually control it or whether you have different levels of influence. And I'll speak about that more in the coming slides. And I also wanted to highlight the public sector standard we do have that's not related to consolidation directly, but about transactions and amalgamations in the public sector, IPSAS 40, which is an important standard if you're doing reorganizations within your public sector entity to look forward to in terms of public sector guidance on dealing with those types of transactions. And again, in the interest of time today, we won't get into that, but I did want to highlight that. So the main consideration in applying IPSAS 35 and all of the guidance under the standards on interests and other entity is really about assessing control. And depending on the amount of control and influence you have over the controlled entities will determine which of the various standards you might apply. So at the top on the slide here is IPSAS 35, and this really, the definition of control relates to your ability and exposure of rights and the variable benefits. So it's about the power and benefits that you can exert over your investment and your ability to control it. And if you are in IPSAS 35 in scope, then you do consolidate, and that's full line-by-line consolidation with eliminations, and I'll speak a little bit more about some of the accounting considerations later on. However, often there are situations where you might have joint control, and under a binding arrangement that sets out the joint control, there is two different types of accounting you can have. So there's the equity method type of accounting and joint operations. And again, we won't have time to get into that today, but I did want to highlight that those are considerations you might want to think about depending on the nature of the control you exert on your investment. And then there's also significant influence. So this is much lower than control, but the ability to influence the investment, maybe 20% investment. And in that case, you can do what's called the equity method of accounting for your investment, where you do an equity pickup. And again, we won't get into that today, but this is something just to consider when you're thinking about those entities that you control. And then if you have a lack of influence, so just a normal investment, that would be when you'd apply the financial instruments accounting standards to apply for that investment as a financial investment. And again, we won't get into that today either. The main thing to highlight on this slide before moving on is it's really the principles in the various standards are principles. They're not meant to be read as rules. You really need to look at the facts and circumstances of the investment in that entity and assess, applying judgment and materiality, whether or not you exert control over that entity and whether you have to consolidate. I'm not going to spend much time on this slide, but there were a couple things I did want to highlight related to IPSAS 35 in particular around the scoping and determination on whether you are in IPSAS 35 or not. And specifically, I wanted to highlight that there is a scope out for a public sector scope out that's been incorporated in IPSAS 35 related to investment entities that have investments in investment entities where there's a scope out where you can do the financial instrument style of accounting rather than a full consolidation. And this is a public sector difference from the underlying IFRS standard that the IPSASB has incorporated into the guidance in IPSAS 35. And if you are one of those types of investment entities with those types of investment, this is a practical expedient that's been built into the standards for the public sector that you can apply. And again, we don't have time to go through this whole chart today, but I did want to highlight some of the considerations from scoping on the slide that you might want to think through if you were in a control situation. In not all cases would you have to consolidate. So IPSAS 35 itself is an aligned standard with IFRS 10. It's been in effect now for a couple of years. And although it is aligned, there are some public sector differences that have been built into the guidance in that standard. So we do our normal terminology and public sector changes we make. One of the big ones to identify here is we've developed a concept of a binding arrangement that brings in to the standard a broader understanding of the types of arrangements in the public sector that give you binding ability to control other entities. So this is a little bit wider than what's in IFRS 10, and it takes into account the circumstances of public sector entities. There's also additional guidance to help in assessing non-financial benefits in the public sector context, and a number of public sector specific examples that have been developed from the public sector perspective to help assess and understand the different concepts in the standard and apply those in the public sector. I did want to note that we did consider alignment areas with GFS when this standard was developed. I won't get into all the details today because I'm sure Sahe will touch on the GFS considerations in her presentation today. But I would note that in all of our projects, when we're developing guidance, even if it's an IFRS project, we do consider the GFS angle and the ability to align as much as possible to the statistical accounting guidance so that we can, again, make the guidance as useful and applicable in the public sector as possible for multiple purposes. an important concept in IPSIS 35 is the idea of an economic entity. And I just wanted to highlight this because it's quite important for determining the entity that prepares consolidated financial statements. And if you really step back and think about consolidation accounting, what it's really about is the economic entity, so the controlling entity, consolidating and fairly presenting all of its controlled entities in a set of consolidated financial statements for the purposes of fair presentation of that entity's financial position and all of the assets and liabilities that it controls and is obligated towards. It sounds like a simple concept, but it's not really that simple. And the standard has a lot of guidance to help you determine the economic entity and apply the principles in the entity. But it's important to highlight that you can have multiple levels of consolidated financial statements in a group. And that's really what this slide's trying to emphasize here. So if I use a simple example, at the highest level, economic entity A might prepare consolidated financial statements that brings into its accounts and consolidates all of the activities of the lower level entities. So economic entity B, C, and the entities that it controls. But at a lower level of consolidation, you can also have consolidated financial statements. In the example I would use here, if economic entity A is a municipality, so the public sector entity, that controls some state-owned enterprises or public utilities, at economic entity B, economic entity C. And for reasons, for example, maybe they list the shares for those entities on a public exchange, they might also have to prepare consolidated financial statements at the lower level. It really comes down to the users of the accounts and the accountability at the various entities. So I'm going to skip over this slide, just in the interest of time, because I want to talk a little bit about the accounting requirements in the consolidation standard. And I think for those of you who've done consolidation accounting, it can be quite complex and tedious. And as was alluded to in the opening remarks, it's one of the areas that's probably the hardest or the last hurdle in an implementation of IPSIS, is the actual ability to do a consolidation. Because it's more than just the normal accounting, it often requires detailed systems and specialized systems to appropriately do the accounting. And that's because of the very detailed procedures that need to be applied for combining like assets in a set of financial statements, eliminating the investments in controlled entities, eliminating balances and transactions between the economic entities that are controlled underneath, so your eliminations, and also adjustments needed to conform with accounting policies. And this is one area I'd wanted to highlight specifically on this slide, is adjusting to conform with accounting policies. So one of the benefits of the guidance in IPSIS and how it's aligned with IFRS is it makes it easier to consolidate state-owned entities into the public sector entity because of the alignment of the accounting principles. However, there would still be a need to make sure the accounting policies conform. Now, in making that judgment, you can apply materiality to determine the accounting policies that need to be adjusted, but this is normally an area of challenge and where some good thought process in designing chart of accounts, accounting policies, and aligning can save you a lot of time and effort in the consolidation phase. So something to really think about as you prepare your consolidation system, your chart of accounts, and your accounting policies from your different levels of controlled entities within the economic entity. I think that's the last point I'd like to make on this slide, and I think we could spend an whole hour talking about consolidation, but I don't want to take up too much time on that today. So with that, I just want to say thank you again for having me here today. I'm looking forward to the panel discussion that will follow, and I hope I've done justice for the IPSIS 35 main concepts, but really looking forward to the discussions. Thank you.
Thank you very much, Ross, for this very important intro. Now let's move to Sache, please.
Thank you very much for having me here today to talk about the GFS perspective of consolidation. If we talk about the GFS perspective, I first want to start off by talking about the objective of GFS, because the objective of GFS explained to us some decisions on the consolidation practices in GFS. I also want to reiterate what is meant by consolidation in GFS before I move on to talk about the scope of GFS consolidation and what is it that we want to consolidate, practical compilation and consolidation process, and lastly, and I think the most important message, I would like to plead with you to leverage accounting reforms to also improve fiscal reporting in your countries. So to understand the GFS consolidation practices, you need to understand the objective of government finance statistics. Government finance statistics is a set of macroeconomic statistics designed to support fiscal analysis. And the GFS that does not stand on its own. It's part of the system of national accounts. And the system of national accounts comprise of the subsectors of the government finance statistics, the balance of payments information, and the monetary statistics. And all of these work together, and all of them work according to the same accounting rules and principles. For GFS, it is particularly suited for fiscal analysis because the GFS framework itself has some inherent attributes that makes it suitable. The GFS framework is comprehensive. It includes all the income flows as well as the expenditure, as well as balance sheets and cash flows. It is a standardized system. It is a transparent system. It is consistent over time if you apply it in the correct manner. And the most important attribute of the GFS is it sets a system that is comparable across countries and across entities of the government. Macroeconomic data for the GFS and for the system of national accounts need to be organized in a systematic manner before we can actually have the benefit of the information. And for the macroeconomic statistics to be organized, we first need to delineate the domestic economy because the system of national accounts is looking at the domestic economy. Once we have the domestic economy defined, we can identify the institutional units or the role players in that domestic economy. And once we have all those role players defined, then we can actually group them together in sectors and do our analysis for the different sectors of the economy. And I want to say from the onset, while there is some differences between the accounting consolidation concepts and the GFS consolidation concepts, many of those differences can be managed by either the accounting policy that was adopted or by the disclosure and the presentation of the information in a specific format that facilitate both accounting as well as statistics. For consolidation in GFS, what we mean with consolidation, it is to present a set of institutional units as if it's one institutional unit. We aggregate those, the data for those institutional units, and for consolidation in GFS, we primarily mean line by line. And then we eliminate, in principle, all the entries that represent relationships between the various institutional units. We consolidate both stocks and flows. Stocks, for instance, the balances of loans extended and loans received. For flows examples, interest paid and interest received, taxes paid and taxes received. So both stocks and flows are being consolidated. And we also have a principle according to which we need to do intra-sectoral consolidation as well as inter-sectoral consolidation. Intra-sectoral consolidation is when we take all the ministries and we put all the ministries together as a budgetary central government. So that is an intra-sectoral consolidation. Similarly, if we take all the local governments and we put them together, we consolidate local government accounts, then we have an intra-sectoral consolidation. However, when we consolidate the ministry's account, the budgetary central government account, with that of the local governments, then we talk about an inter-sectoral consolidation. This is different from what is done in financial accounts, because the financial accounts primarily consolidate, I like to think of it in a vertical manner, all entities controlled are being consolidated, whereas in the GFS we extend that to also bring in entities that has got similar features to derived sectors. So let's look at the scope of general government consolidation. The concept of residence is firstly used to identify the domestic economy, and on the slide I have got details on how we determine residence, but I don't want to go into the details in the benefit of time. Once we have determined the resident economy, the rest of the world is being identified outside of that residence criteria. In practice, this delineation do cause a difference between us and the accountants. Or in theory, it does create a difference. But in practice, I haven't seen that many cases where, well, by definition, a general government cannot have a non-resident unit. Public corporations can be created as a non-resident unit, but I haven't seen that many examples. The exception probably is special purpose vehicles, but in the last revision of the SNA GFS, there was specific arrangements made to accommodate the recording of special purpose vehicles. And again, time does not allow me to go into that detail now. When we need to identify the institutional units, it is important to think about what is an institutional unit. And we see that as an entity that is capable in its own right of owning assets, incurring liabilities, and engaging in economic activity for which itself is held responsible. These attributes of an institutional unit is important, specifically in the case of governments, because governments quite often tend to create entities that is not really acting independently. And in the GFS, we say that if an entity does not comply with the definition of an institutional unit, that entity's accounts need to be presented as a part of the entity that actually controls it. Within the system, then, we identify different types of institutional units. First of households that we don't need to deal with in the GFS, but on the other hand, legal and social construct of the economy. Those comprise of corporations, non-profit institutions, and government units. We cannot always infer the status of a unit by its name, and I would like to encourage you to rather investigate the nature of an entity and then decide to which of these they belong. And two examples that I'm thinking of that we see often is, for instance, a road company that is not really a company, or an infrastructure corporation that is not really a corporation in the statistical sense, and I will talk about that a little bit more in the next slide. In practice also, some individual reporting entities in financial reporting context may not qualify to be an institutional unit in statistics. And here I'm thinking about quite often we see a separate account for a reserve fund that the Ministry of Finance controls. Those reserve funds does not act on their own. They are just part of the government accounts in the Ministry of Finance, and therefore in the statistical basis of reporting, we will not consider them as an institutional unit, but rather combine their results with that of the entity that controls them. Institutional units relevant for government or public sector reporting rather, is first the government units. The government units are these unique institutional units that were created by political processes. They normally have a jurisdiction over a specific geographical area, and they execute authority over other institutions in that area. The principal functions of such government units is that they have the responsibility for provision of goods and services to the community or to individuals, households, primarily on a non-market basis. And I'm going to come back to non-market basis again. The other function that they perform, they redistribute income and wealth by means of transfers. And very importantly, they finance their activities primarily out of taxation or other transfers that they have received. In contrast, a corporation is defined as an entity that is capable of generating profits for the owners of the corporation. And those profits are normally, well, not normally, they are generated by market activities. So they are set up specifically to engage in market activities. So here I want to emphasize the fact that they are legally incorporated does not make them a corporation in a statistical sense, but rather the fact that they do generate profits for their owners and the fact that they are involved in market activities. So it's not the legal status, but the way that they operate that defines them. If we then want to define or delineate the public sector consists of all entities under the control directly or indirectly by resident government units or by public corporations in that jurisdiction. We use the market, non-market determination to determine whether something goes into the general government or in the public corporation sector. And the non-market producer are those producers that provides all or most of their output at prices that are not economically significant. Whereas the market producers produce goods and services at prices that are economically significant. And in the statistical basis of reporting, there's a whole criteria according to which to decide whether it is an economic significant price or not. Suffice for this presentation in the limited time to just say that normally covering at least more than half of the cost of operations of an entity indicates that the entity operates at market prices. I know in the European context, Eurostat quite often do a lot of work to look at specific corporations to determine whether they are actually market producers or not. And they have reclassified many corporations established as corporations into the general government sector because they don't operate at market prices. We should also remember that there's some special public entities to be classified. Those are the artificial subsidiaries. I've already referred to those funds that are being created, but that doesn't really operate independently. You can also have quasi-corporations, in other words, an entity that was not legally established as a corporation, but they act like a corporation. In other words, they generate profits for their owners and do market activities. Or you can have market establishments within a general government unit. That would be the case, for instance, if a ministry has a cafeteria in the ministry and that cafeteria sells at economic significant prices. Such market establishments, if they comply with the definitions of what an institutional unit is, that their accounts would be taken out of that of the ministry and rather be presented as if it's a quasi-corporation. Having then said that we've got all these institutional units, we then put them in the different boxes in the economy, being the general government, non-financial corporations, financial corporations, households, or non-profit institutions serving households. And for our purposes, of course, general government sector is the most important. Within the general government sector, you can also have the subsectors for either the central government, state government, or local governments. Social security funds are a specific category of entities that governments quite often produce, and those can be classified in two ways in the statistical basis of reporting. Either as part of the entity that controls them, or in the sector of the entity that controls them. For instance, if you've got a social security fund that operates nationally, it will be classified as part of the central government. Or if you have a social security fund that operates only at state level, then it will be classified at the level of state. However, in Europe, the tendency is to put all the social security funds as a separate subsector of the general government. Each of those levels can also be identified. Within each of those levels, you can also identify either budgetary accounts, which is entities that are covered in the main budget, or extra budgetary accounts. And all of that then comes together. In the case of the public corporation sector, the public corporation subsector of the corporation sector are all those corporations controlled by government. And one thing that I would like to emphasize here is that control by government is not determined by ownership of shares in the statistical basis of reporting. I think to some extent there's a little bit of a difference between us and the accountants there. We say that you have to look at, with public corporations, you'll have to look at a range of indicators of control. And why is it that we say that? Normally, if you have got majority control or majority ownership, that will constitute control. But in governments, you often have cases where there's minority ownership of shares, but there's all kinds of other arrangements that still put government solidly in control of that corporation. And I'm thinking here of things like golden shares and options, government that controls the composition of the board of the corporation, and so forth. I've got a whole list there. So while a single indicator of control could, in some cases, determine control, in other cases, it is necessary to look at a combination of all of these. And I am a little bit rushed, but let's look then at the subsectors of the public corporation. What I would like to point out here specifically is that in the public corporation sector, we can have non-financial public corporations as well as financial corporations. In the category of financial corporations, central banks are included, not because they are a market producer, but by convention in the statistical basis of reporting. You can also have public deposit-taking corporations and other public financial corporations. But most importantly to note is that only at the level of general government and at the level of public sector, you can make comparisons across countries. Because countries are organized differently, you have to have that to total non-market activities or total market activities. And at that level, you can make comparisons. Otherwise, your comparisons may be skewed. If we think about practical compilation, first off, the collection of source data is the first step in compilation. And there's different ways in which that can be done. Of course, the integrated financial management system quite often is a very, very reliable source of information. If you have a unified chart of account, that could greatly facilitate consolidation. And within such a unified chart of accounts, what is important that you make sure that you set up the unified chart of account categories in such a manner that you can actually identify relationships. That can usually be done in two ways, either in the structure of the chart of accounts itself. In other words, you have transfers, main category, transfers to local government subcategory, etc. Or otherwise, your accounting system need to identify the counterparts to transactions throughout the accounting system, in which case, again, you can identify items for consolidation. Where you can't use the integrated financial management systems, quite often it is necessary to do a survey or standardized reports where the entity responsible for the consolidation of the general government or the consolidation of the public sector have these standardized reports that need to be filled out by the various entities and submitted to the entity. You can also use the financial statements if the financial statements is compiled in such a manner that is sufficiently detailed. And lastly, quite often it's necessary to use a hybrid combination of these to get to the general government and the public sector data. But I want to emphasize that we, at the statistical side, we consider data from an accounting system as being the most reliable data for the compilation of the statistics, because that data quite often is, well, not quite often, usually, is subject to audits, and that gives you some quality assurance of that data. Sometimes it's necessary for you to make adjustments to the data before you can consolidate. Those adjustments can relate to accounting policies, reporting dates, basis of reporting, as well as some methodology differences between accounting and statistics that has been used. Some of those adjustments you need to make before you consolidate. For instance, if you have an entity that has a different financial year than what the consolidated financial data are being prepared, you have to make adjustments to that entity's data before you can consolidate. In other cases, you can first aggregate and then make adjustments to the group. For instance, if the non-financial assets are being presented at book value in the original data, and you as a statistical compiler want to have the market values, that kind of adjustments can be made after you have aggregated across the sectors. But the thing that I would like to remind you of is when you do those adjustments, make sure that you do it in a consistent manner. If you do an adjustment somewhere as a debit, you have to have a credit. Otherwise, your accounts will not be balancing. So those consistency checks are very important. We have always also identified major relationships that's usually subject to consolidation. In the case of general government, it's usually your grants and your transfers that are the biggest item that need to be consolidated, and also loans extended or received and debt instruments between entities in the general government. When you move on to the public sector, of course, equity is an important item that would be subject to consolidation if you went to public sector consolidation. Some consolidation tips and tricks. Focus on amounts that are really significant and will make an impact on your fiscal analysis when you do the consolidation. Some rules of thumb often can be used when you do the consolidation. Consolidation is a symmetric process. Your balancing items need to remain the same. So if you do want to do analysis just about the big aggregates, you can use the unconsolidated data of the balancing items. The moment that you have done consolidation and one of your balancing items, like your net asset position, have changed, something is wrong and you have to go back to the drawing board. Convincing evidence from one institution can often be used to attain the symmetry. For instance, if there's government transfers and the total local government transfers is not equal to what is being reported from the central government who made the transfers, then probably central government number is more reliable and the local government numbers need to be adjusted. Creditor information is usually considered to be more reliable than debtor information. Discrepancies between units can originate from various reasons. And the first option always should be, can I resolve this discrepancy? And I will just now talk about an example of this. But generally also the higher level of government data is quite often more reliable than that of the lower levels of government. And then to conclude, I want to encourage you to make sure that when you do accounting reforms, you leverage that to also improve your fiscal reporting. And I want to illustrate that by a recent country example that I have worked with. I was requested for a country that wanted to borrow from the IMF to look at their financial or their fiscal data that were deemed to be unreliable. The fiscal data for surveillance, therefore, was not that good. I did a mission with a team to the country, and lo and behold, what did we find? We find that this country has started to do accounting reforms. That those accounting reforms has led to them producing quarterly and annual financial statements. So any of you involved in accounting reforms will know that accounting reforms are quite expensive. It's a huge effort. So they made all this effort to produce this quarterly and annual financial statements. But those financial statements currently are not being used for fiscal analysis in the country. And it's because there was some mistakes made, and I would like to point that out to you. The country produced a monthly budget execution report, which they call the MDA budget execution, ministries, departments, and agencies. So they do this budget report, and they pick information from various places, they throw them together and hope they've got a reliable result. On the other hand, they do produce the quarterly financial statements for the ministries, departments, and agencies. But unfortunately, when they produce those reports for the ministries, departments, and agencies, it's not the same than what they do in the budget execution report. In the budget execution report, they include just the transfers to the agencies. In the financial statements, they properly consolidate all those agencies' reports. So MDA is not equal to MDA in these two reports. But on top of that, in the financial statements, they produce the information in such high aggregated levels. For instance, taxes, they produce just as direct and indirect taxes. They don't produce the details in there. And because the lack of details in those reports, the reports are not useful for fiscal analysis. In their financial statements, the way that they present it at the moment, they do local government consolidations through to the public enterprises of local governments. But for MDAs, they don't do it through to public enterprises. They have a separate set of public corporation accounts in their presentation. And the public corporation accounts, the coverage of that is insufficient because they have not included any of the non-financial public corporations. So there's an incomplete coverage, and they did just a once-off whole of government consolidation. So they didn't first consolidate general government and then put public corporations together to derive the whole of government accounts. So if they haven't done those mistakes, they could have used those quarterly and annual financial statements that are subject to audit as a very good, reliable source of fiscal information. So there's some lessons to be learned from this country experience. First, carefully consider the accounting policies that you select and the way in which you present the data. Phased consolidation can eliminate a lot of the problems by first consolidating the subsectors of the economy before you get to the whole of government accounts consolidation just in one step. Make sure that you label your consolidation practices correctly. If an MDA is not equal an MDA, those two reports should not call them MDAs. Disclose the scope and the coverage of your consolidation accounts appropriately. If your public corporations does not include non-financial public corporations, don't call them public corporations, rather put it as non-financial public corporations. And if there's any omissions, if you have included only 5 of the 10 big public corporations, disclose that in the account so that you're very transparent about what you give to your audience. Disclose any deficiencies that you may have if you haven't included the central bank, for instance, and then continue to do your consistency checks throughout your consolidation process. First, try to resolve those inconsistencies in counterpart transactions. If you cannot resolve it, maybe it's necessary for you to make an adjustment. And with that, I thank you. I know I had to go through it very quickly. Thank you very much for the time, and I'm happy to take any questions that you may have.
Thank you very much, Zahed. This was really very interesting and comprehensive. I understand there are questions. We are posing questions for a few more presentations. So I would like to move to the team who developed the PULSAR paper on consolidation. Dmitry was referring to the draft paper. So I would like Professor Bregman, Andres Durlandi, and Dmitry just to present this new paper jointly done with the Zurich University. Thanks.
Good morning to everyone. Buenos dias, bon dia. The thing is because there are some people from Latin America who inviting them in this moment in Focal. They are watching to us through they are connected remote. So thanks for having me here. Really, it's a privilege to speak to you on the new PULSAR product that WorldBank will release soon. It was a work together with Zurich University of Applied Science. I work there as a research associate. The work was a joint work with WorldBank and the university, and in this work was participating Dimitri Gurfingel and Mayara Sasso, who is also connected. She's in Brazil in this moment, but she couldn't join us in this session. And also was participating Professor Dr. Andreas Berman, who is present here. And really, it's the technical note is based in the consolidation of financial statements on different levels of government. This is a product that presents to all of you the good practices and experiences around for 4 countries: Spain, Brazil, Switzerland, and Georgia. Thanks also, David, because you shared with us the experience in Georgia. And the idea is also to see how is the process of the consolidation and the compiling statistics process are performing in those countries. So the thing is, after we see all the challenges are facing these countries, we decided to delineate a comprehensive approach to address these different challenges. So I would like to move here to present the agenda. So first we will speak about the context, and then we will see how is the consolidation and compiling process according with IPSAS 35 and GFSM 2014, as already Sajid and also Ross presented us already. And then we continue speaking about the examples of the international practices of the 4 countries we mentioned, I mentioned before. And then we will speak about how is the proposal of the generic and comprehensive process of consolidation and compiling statistics. Some challenges and mitigation measures we can define in this PULSAR product, the conclusions and some recommendations. So the context indeed is because public financial management is in the scope of the new public management ideas, and it was since 30 years ago they started to speak how the government could be managed in like the sense as an enterprise, and also in terms of transparency of informations. So the idea is to have a very transparent information to take some decisions, and also to provide more resources. So the idea is also the accounting is providing some inputs as well to the production of GFSM, of the production of the statistics. So the idea is how we can interconnect the 2 processes, because in this moment they are performing separately. So the idea is also to see how it's possible to manage the challenges they are facing, the countries are facing right now, and how it's possible to conciliate these 2 processes. Because as mentioned in 2009, Professor Andreas Berman said that public sector accountants provide this input to the GFS. So in this order, we would like to also to highlight the different paradigms that consolidation and compiling process according with IPSAS and GFSM 2014 has. One of the paradigms is the scope. And the scope, we can see, for instance, that IPSAS is based in an economic perspective. Also, but however, the GFSM 2014 is based in a sector. Sectors in the GFSM 2014, they are speaking about how they can delimit the sectors of the government. So here we can see a figure. So the figure shows in this moment 3 economic territories: economic territory A, economic territory B, and C. So here in the economic territory A, we will use to present to you how is possible to have the compiling process. We can see the delineation already Saje has mentioned, like the general government, public sector, and inside of general government, we can see the subsector, local government sector, state government subsector, and central government subsectors. Inside of these subsectors, we can find institutional units already Sahej already mentioned. This is a little bit different. The concept of the institutional units is a little bit different to the concept of the of the entity that report in IPSAS, because entity of report in IPSAS is also could be a program or activity. So this is a little bit different, the two concepts between IPSAS and GFSN 2014. So, and then we can see also public corporations, and public corporation is composed by financial subsector and non-financial subsector. Also, we can see that the economic territory B and economic territory C are presented as a rest of the world. So, and also they are composed by different institutional units. So also these rectangles in this color blue is representing the compiling of in terms of the GFSN 2014, but the rectangle in red with the red line is showing how is the consolidation process according with IPSAS 35. So we can see here in the gray shape, these institutional units in the central government subsector. This is the controlling entity. It's an example of the economic entity, but the controlling entity will be located in the central government subsector for this example. But also we can see also in central government, this controlling entity could control another entity in the central government as well. It's possible it can control another entity in no financial sector, as well in the economic territory B and C. So for IPSAS 45, the IPSAS 45 is necessary to see the control, but the IPSAS 45 doesn't take into account the residency of the institutional units. That is a little bit different that in GFSN 2014, as Sage said already, is necessary to see the residence of the institutional units to consolidate to compile the GFS. So in IPSAS, the control is based in 3 criteria. So it's necessary to see the 3 criteria as already Ross mentioned. So we have to see if the entity has power over the other entity, and also maybe to see if the entity of the government is exposed to the benefits of this involvement in the other entity. And in this moment, I would like also to highlight that the benefits in IPSAS 35 is not just financial benefits. Also, it could be like no financial benefits, like the benefits because the other entity is helping to the controlling entity to achieve its objectives. So it's possible to have financial and non-financial entities, and also in the financial entities, we can see also the dividends if we are speaking about enterprises, but also it's possible to have some other benefits, maybe reducing the cash flow, the outs of cash flow, also possible could be financial benefits. And also, the other criteria of control is the ability of this government to use the power to affect these benefits. So these three criteria are in the perspective of the IPSAS 35. So to see how to assess the control is not just the ownership, also it is like in GFSN 2014, so it's the same. So we have to see also if it's possible to demonstrate this power through equity, maybe, but also it's possible to see if there are binding arrangement, like also Ross mentioned already, maybe if there is a legislative or maybe a contractual arrangement or administrative arrangement or different documents that helps to the controlling entities to direct the relevant activities of the control entities. So here we can see now the GFSN 2014 perspective. Here we have the government sector, so we can see the public corporation sector as well. So here also we can, inside of each subsector of general subsector, we can find in the color green the extra budgetary units and the blue the budgetary units. But also it's possible to find there the social security funds. But as well, the social security funds could be found as another subsector of the general subsector. And for the reason is this dash line we have in the right in these presentations. So and also in the public financial sector, in the public corporation sector, we can have also the entity controlled by the entity, and also we can have the quasi-corporation, as also Sajid has mentioned. There is some quasi-corporation, some institutions that inside in the government that doesn't have a legal personality, but also they are having different activities in the commercial perspective. So this is like the procedures we have in Russian. The time I will not enter in the details, but this is the consolidation process. So basically, it's 10 steps. Grouped in three phases. So initial setup, maintenance, and preparatory work, and financial data consolidation and financial reporting. Also, you can see when we release the PULSAR product, also you can see each step. So it's very important just to highlight the steps. The main steps is like use unified and harmonized chart of accounts to report informations, insurance the same accounting policies, but I understand it's a little bit different in each jurisdiction because sometimes you have different frameworks. So like enterprises are applying IFRS, and for instance, the government units are applying in IPSAS. So the idea is also to have maybe just for reporting purposes, not for accounting, just for reporting purposes, just to send in the information to have the consolidation. Also necessary the integrated financial management information system is very important, and also already Saj have mentioned as well the hybrid approach that consists in necessary to have at least one software in the general government. So in the for instance, if we are speaking in the central government, we will have just the at least this unified system. And this is the compiling process, just to finish. This is the compiling process, but this process is also already delineated in the other product we have released also with it was in 2019, it was the process of the compiling statistics. So now I will give the word to Andreas, who will present to you the experience of different countries, Spain, Brazil, Switzerland, and Georgia. Thank you.
Thank you very much, Durlandi, for this comprehensive overview of the two frameworks. As mentioned, we have 4 countries. Why did we choose those 4 countries? Well, all 4 of them are advanced in implementing IPSAS, but also GFSM 2014 manual. So they are based on the actual international standards. And of course, represent different types of government to show some of the effects. Now, Brazil, of course, it's a large country, not only playing well in the football championship, unfortunately, I have to say, as a Swiss, but also it's really huge in terms of the size. It's the largest country in that sample. Now, it's a federal country, so they have states, and the states are actually autonomous, and so are the municipalities, which are quite numerous, as you can see. Now, what they do in terms of consolidation, they have consolidated financial statements of the federation. So that's basically the national government, including the national government's state-owned enterprises, if they are non-market producers. The federal market producers, and that's a slight divergence from IPSAS, are included using the equity method only and not using full consolidation. They also have another set of financial statements for each subnational entity, so they follow basically the same rules as the national entity, so the states also have state-owned enterprises, for instance. And that's quite interesting, they have consolidated financial statements of the entire public sector, so they consolidate not only the state-owned enterprises, but also the subnational levels of government and their state-owned enterprises. So that's really a huge consolidation of the entire public sector they produce. In terms of statistics, they compile the GFS using the concept of the general government sector, which was already introduced by Sahe in her presentation and by Durlandi as well. They cover both budgetary and extra budgetary units, as well as the social security funds. Quite interestingly, they are quite automatic. It's not fully automatic, the process, but they have IT systems which help them a lot in both consolidation and compiling GFS. But at the end of the day, in particular for GFS, they still use a little bit of Excel, which we will see is also a practice in other countries. The second country, and I do that in an alphabetical order, is Georgia. Georgia is completely different. It's a unitary republic with only 2 levels of government. It's also smaller than Brazil, obviously, like all the other countries which I will now present. They do consolidated financial statements of the central government, including all central government units based on their fiscal arrangements. They include the legal entities of public law and the non-entrepreneurial, non-commercial legal entities. However, they are not covering the market producers. So again, this is a difference to IPSAS, actually, a deviation from IPSAS in terms of that consolidation. And at the local level of government, they basically do the same, and they publish this in the appendix of the central government's financial statements. The statistical side is covering, again, the general government sector, which is quite similar to Brazil. I think the notable difference is that they don't have any social security funds, unlike Brazil, which does have. They also produce high-frequency data, but they only cover the budgetary subsectors and not the other ones. It's a bit less automatic. They're using a lot of Excel to produce those consolidations and the compiling of the statistics, although they also introduced a few consolidation softwares at the local level. Spain, it's sort of a parliamentary monarchy, but the king doesn't really play a role. It's a decentralized unitary state, so they have autonomous regions and self-governing local governments, as well as social security institutions. They do a consolidated financial statement at national level, and I think they adhere very closely to IPSAS actually, because they cover the administrative and social security entities, not-for-profit institutions controlled by the government, but also market as well as non-market producers of the which are controlled by the government. So that's in compliance with IPSAS 35 presented by Ross earlier on. And the same is done at subnational level, at least if the entity has more than 50,000 inhabitants. So they have an exemption for smaller municipalities, for instance, or also for the smallest communities. GFS, they follow the European System of Accounts 2010, and they also produce general government sector statistics. No public sector statistics are produced. It's probably of the 4 countries the one which is most automated. They have really an integrated system which is automated for both for consolidation and for statistics. But still, at the end, for the adjustments, they use actually Excel like the other countries. And finally, Switzerland. Switzerland is, again, a federal country. So we have sovereign states and autonomous communes. We do have consolidated financial statements of the federal government, of the confederation, which is actually also in compliance with IPSAS 35, because it includes also all the state-owned enterprises. It's interesting, Switzerland does not have English as a national language, but still the consolidated financial statements are translated and are presented in English, and that's quite useful for you as well if you want to have a look and if you don't speak German or French or Italian. The GFS is prepared on the basis of the general government sector in compliance with GFSM 2014. Again, it's a sort of a semi-automated process. There are some automated tools, but also R and Excel are used for the purpose. So it's really a semi-automatic process. Now, as a conclusion, basically, we observed what is a good consolidation process. I'm not going through all the points here in the interest of time. We have already heard about the importance of a harmonized chart of accounts, for instance, and checking data consistency. So this is really what we found in all 4 countries, which are good practices. But very similarly, we have good practices in compiling statistics. So again, it's also the harmonized chart of accounts. It's also checking data consistency. So it's not a mistake that those 2 slides show basically almost the same, but this is actually the finding of those cases. And that led us to the idea of integrating the process. So if both processes are so similar, why don't we integrate the 2 processes? And this is basically the proposal. So we will propose in the technical note a generic and comprehensive, as we say, consolidation and compiling process, which is basically producing both products. We know that, and of course, we agree that there are differences which need some adjustments between the products, but this can be handled in the same process, we are convinced. And this could be more economical and could also be perhaps simpler for the involved ministries of finance, which are present in the room. I can't go into all the steps in the interest of time, but as you can see, it's a slightly larger process than the 2 processes presented by Durlandi. However, thinking about it, it's not 2 processes, it's just 1. So in that sense, it's slimmer, it's more efficient than the existing 2-process model. With that, I hand over to Dimitri for the challenges and the conclusions.
Thank you very much, Andres. For the sake of the time, again, I will not go into details of each of the challenges and mitigation strategies. You will see them in a similar table presented in the technical note. The main challenges we have identified in the constitutional arrangements, the legal requirement that in some cases require legislation approval in order to be changed or adjusted. In some cases, even it implies a supranational level agreement in case of European Union, for instance. Some additional challenges identified were the difference between accounting policies, and we had a related question 2 days ago on that. And the main recommendation for that, in that cases, is to issue specific instructions and guidelines for accounting closing to obtain information under the same accounting framework and policies. And also, actually, the next recommendation to have a chart of accounts that integrate requirements from a different accounting basis. And also the GFS approach could also facilitate the process of consolidation itself. So, and it's possible to have sort of 2 charts of accounts, one used for the accounting purposes, which is part of the IFMIS of the integrated information system. And then there could be another chart of accounts or bridging algorithm, which would allow to reconcile the results between the use of IPSAS, IFRS, GFS, or other accounting or statistics frameworks. The use of IFMIS specifically for consolidation, it's crucial. It's relevant for accounting in general, but to do consolidation in a big country manually, it's almost impossible. So this is something that should be considered. Either the system could be updated if there is already an automated system, or in some cases, a similar system should be developed and implemented. Now, we know that it's not an easy task, and it could be quite expensive. So the suggestions there, it's look at the different financing options, but also in the different implementation modality or development modalities of an integrated system. It's not only a commercial software out of the shelves like SAP or Oracle. You can also consider to develop something in-house. Many countries do that. Or look at the available open source software and programs that could be adapted to your country context. And finally, we already briefly mentioned is the inconsistency between accounting and statistics approach. So additional guidance in order to reconcile these adjustments could be helpful. Some of the main conclusions of the paper consisted of the fact that consolidated financial statements include several entities which are legally independent. Unlike individual financial statements, they don't respond to legal questions, but to economic aspects. Consolidated financial statements provide additional information by including several legal entities in what we call economic entity. And Ross also talking about that important concept for our accounting framework based on IPSAS. Such additional economic information is necessary because the organizational structure of governments, even small governments, include all kinds of entities which are legally independent, but at the same time they are economically dependent. And in terms of economic dependency can be related to 3 different aspects. First one is joint financing through tax revenues and debt, and also the the same budget process which consisted of approval and execution of the budget by the executive branch, but at the same, the budget should be approved by the legislative. Potential financial and operational risks that governments are exposed to, it's another factor for economic dependency. And finally, the periodic transfer between all kinds of entities that at the end should be eliminated for consolidation purposes, as they can create misleading and incomplete information at the level of individual financial statements. The consolidated financial statements include several entities which are legally independent, and the scope of consolidation can vary between the countries and depends on the information needs and the users and the applied accounting statistics standards. It's also possible to have different set of consolidated statements for different information needs. In terms of government financial statistics, they're also a result of a consolidation process. Also, they do not apply concept of economic entity, but the concept of economic sectors. This sectoral approach implies application of statistical estimation and adjustment, which lead to a high level of materiality. In other words, we can say the general financial statistics include entire sectors, but they could be less precise than the consolidated financial statements. The consolidation and compiling processes are therefore similar but not identical. And in summary, both consolidation financial statement and GFS respond to specific information needs, and they present financial economic information about a set of entities and sectors respectively. This is a main recommendation, and they were already briefly covered by Andres. They are mainly based on the country experiences, and actually in the next two presentations, we also will see some country experiences, and obviously in our next session in detail, we will look at 4 specific country experiences. So I will stop here, and I will pass the microphone to Arman.
Thank you very much. We're now moving to Professor Grossi, and let's probably within 12 minutes each, and then Thomas. And of course, we'll have questions and answer session as well.
So thank you, Dimitri, for the invitation. I remember we were in Kiev, Dimitri, that you were planning this event in 2019, and you told me, let's meet next year in Minsk. And as soon as you told me about the topic consolidation, I was very excited. And let me say that it's difficult to say anything new after Ross, Andreas, and Said, Sajay, and other speakers here. But I have a usual, request. People, they ask me, why did you move from a sunny country, region, Tuscany, to Nordic countries, Sweden and Norway? And it's very difficult to answer. I don't have a Swedish wife or girlfriend, unfortunately. I still have Italian one, but the issue is that it is not sentimental. It's about accounting. Because 25 years ago, when I started my PhD in Italy, my professor told me, Giuseppe, you need to do your PhD on consolidation. And at that time, my friends, there was no consolidation in Italy. So I discovered there was no internet so fast, all these applications that we have nowadays. It came one guy from Australia, he told me, Giuseppe, you need to go in Sweden. It's the only country that is consolidating. So my life, in a way, is affected by this consolidation. And let me say something more. I will not add anything new after all these speakers, because they have already promoted IPSAS 35, and they have promoted also the statistical framework. But I would like to bring something European. And I think that consolidation for me is a fascinating issue, because it's not just boring accounting, my friends, but it's also about governance relationship with several hybrid organizational arrangements that Sajay show us in a fantastic way. I started to do research on this topic, and I started to explore consolidation in Europe, and the European Union decided to adopt IPSAS, and they made consolidation in a different way. Everybody, okay, IPSAS is good. We know, Ross, this is perfect. But in Europe, we have a lot of diversity. And the diversity, they are connected to the governance issue, the governance arrangement that we have at European level. So I made a selection of topics with Mr. Dimitri, because I wanted to bring this European touch, unfortunately not Italian touch. because we are not competing at, let me say, at World Cup. Sorry for that. But I will bring an European perspective, and especially Estonia, because I was lucky to be, let's say, advisor. So I spent some time in Tallinn when they were consolidating their annual account. So let's start with European Union. We know very well, now unfortunately we are only 27. We lost one country on the way, but anyway, we can survive, no problem. They decided 20 years ago to adopt IPSAS. It was an official decision, and they were the first supranational organization to adopt IPSAS. It was very, very ambitious because they say from 2005, all our EU organizational arrangement, they should follow IPSAS. So in practice, consolidation, it was a natural consequence. But please, my friend, it's very difficult to consolidate when you have 27 member states that they don't have all of them accrual accounting. So you cannot speak with all these countries. So still we have a dual, so-called dual system. A New Zealand friend told me this is a monster when I present it in New Zealand. It's not a monster, but we have budgetary accounting for EU budget and for EU reporting, but we have general account based on accrual using IPSAS with some variation. And I would like to show a very important variation now. And this is the variation set in the 19 European Union accounting rules. I will focus only on one, otherwise Armand will give me a red card. And I don't want a red card. I want to go to the dinner tonight in this wonderful place. So let me say, accounting rule number 2, it's very complicated because in practice, it's related to consolidation that we should admit is complicated. It's not easy, as we have seen by all presentation, especially in a context where budgetary matter. I spent 1 month in Brussels, EU Directorate General Budget. The key word was not consolidation. Even if I was in the consolidation unit, everything was on budget. And budget matters at EU level, but in any public sector. And I think that the budgetary perspective promoted by the EU is the following. Let's call it before IPSAS, until 2004, they were consolidating all EU institutions like the Parliament, the Council, the European Commission, the European Court of Auditors, the European Court of Justice, and all the agencies that I will show you in a few minutes. And they were using the criterion of the single budget. All entities, independently by the legal form, because the majority, they were not state-owned enterprises, they were agency created through council decision with legal personality responsible of EU programs and funded by the EU budget. So let me say that before IPSAS, they consolidated with the budgetary criteria, but they adopted IPSAS. At that time, it was IPSAS 6, 7, and 8. Nowadays, we have 35, 36, and 37. And they pointed out in their official document the criterion of consolidation of IPSAS. They are too similar to IFRS, and they don't fit with the EU environment, especially the criteria connected to the shares, because agency, they don't have shares, institution, they don't have shares, but they are funded by the EU budget, and they are audited by ECA, and their annual account, they are approved by the Parliament. So this is the global consolidation. And as you can see, we have control criterion from IPSAS 35, but we have the budgetary criterion of EC rule number 2, and all institutions and entities funded by the EU budget, they should be included in the consolidated account of the European Union. So in practice, this is the, Ross was talking about economic entity, and here we have the economic entity of the European Union. We have 11 EU institutions, and we have also some consultative body. We have 43 agencies included. Only one is an associate agency, but 42, they are control agencies, very famous. I'm sure that you know the famous agency that is Frontex, that is dealing now with migration and EU borders, but they are dealing with different activities, and they are, let me say, that's another important point. That's why I'm talking about diversity. We have diversity also on the currency. They are operating in different EU currency, not just euro, but also we have some agencies in Sweden and Denmark that they are not using euro. So the consolidation is even more complicated. What is doing EPSAS? Because I know that the time is running. And let me say two important documents of EPSAS, one in 2018. Yes, they are promoting IPSAS 35. So I don't think that Ross should be worried about that. They are promoting IPSAS 35, yes, but with some, let's say, European touch. Let's talk it European touch. And they are also promoting consolidation at a different level, like we have seen with Andreas in the very interesting study made by PULSAR team and Andreas and Dimitri team. All of government accounting is important, but we have only few countries dealing with all of government accounting, and they included 3 countries, Estonia, Slovakia, UK, and for PULSAR country, I think that Estonia and Slovakia case can be very useful. Scope of consolidation, I don't go in this topic because we have already done everything. Cost and complexity, I think that the presentation and report concluded by Dimitri was enough important. But let me stress something about on the organizational nature of the scope of consolidation. In Europe, starting from Italy, concluding to Norway, starting from Portugal, concluding to Ukraine, in Europe, we have a lot of organizational diversity. We have a lot of different organizational model on how public services they are provided. So we have private legal forms, market, non-market, we have public legal forms, we have hybrid legal forms. So we should consider this complexity. I think that EPSAS is doing a very good work. At least I was informed that they are working on specific additional guide in order to ensure this comparability, because EPSAS task force in Eurostat has a mission, I don't want to say mission impossible with comparability, but mission difficult with comparability. Why? Because we have countries, very good, we have countries with different hybrid organizational form. And what I like in EPSA style, that they are giving a sort of freedom, autonomy to countries to include or exclude entities by the scope of consolidation, considering this, let's call it national governance model, that they are quite different between EU countries, because we are so different between South European countries, Central European countries, Nordic, Eastern European countries, and so on. So they are in favor of IPSAS 35. That's the last report, 2021, realized in collaboration with PwC. They are in favor, as you can see, all the qualitative characteristics, true and fair view, but they included an important keyword. And the keyword is called European public good. What's the meaning of this European public good? European public good means that we need to be careful. I would like to read what they say. about European public goods is European economy should be protected, and we should protect the economic and financial stability and also the economic growth. And they are concluding in the report with an important word. We want that all EU member states, they follow EPSAS, but we are aware about heterogeneous reporting requirement. And I would like to add heterogeneous governance arrangements of all these satellites, that they are more complex than in Anglo-Saxon countries. So we should say the truth. The conclusion, because I still have a minute, is the comparative table. In the report 2018, Eurostat, they selected 3 countries. Let me point out only one, something different by the rest, is the Estonian case. They are providing disaggregated information about GGS and public corporation, considering IPSAS 22. And let me say also something important. The central bank in the UK is not included in the consolidation, and also at the European Union level, the European Central Bank is not included in the consolidation. And also the issue of the central bank is another issue that should be taken in consideration. Thank you for giving me this opportunity. I hope that I was on time. Thank you.
Very interesting. Thank you very much. Very good, Thomas. Just to advance, we are going to take about 15 minutes from the coffee break because we have a lot of food today and coffee. So let's use this opportunity to ask your questions as well. Thanks.
Yeah, thank you. The fantastic thing of being the last of 7 speakers is you have no time. You get the 1 minute left sign when you even started. You are kind of nearly falling into coma because you're completely tired. But the good thing is most of your points have been made anyway. So it's fantastic being the last speaker. So what am I going to talk about? Kind of first give you a very short background. Why are we doing that? Because I think that's always the question. Why are we doing this whole purpose? And to be honest, I think consolidation also kind of impacted my life heavily because not of girlfriends or other issues, but it is very complex and technical, and it kept me awake during nights, I can tell you, not only in the public sector, but also in the private sector. And that's probably already the good message. You are not alone, right? So all the issues you are struggling with are the same issues the private sector groups are struggling with as well. So then I will focus on a few main issues. We talked about them already from different perspectives, like defining the parameter, defining the scope, how to kind of deal with accounting policy differences, and some organizational challenges. And then last but not least, if kind of Armin does not hit me with a 0 minutes slide, then I will talk about some further consolidation challenges. So why do we need consolidated financial statements at all? I think if you look at the conceptual framework of IPSAS, one of the objectives of public sector accounting is to support decision-making of users. And obviously, kind of one of the main users is the government itself, right? And government policies are to be decided not at the entity level, at the single entity level, but on the highest level of the what we call economic entity. And therefore, you need the big picture. So it's necessary. And reforms carried out in many countries, and I think we heard about that now, consolidation is like the last step of the accounting reforms. So all these reforms carried out to improve accountability and transparency only make sense if the assets, liabilities, risks identified on a single entity basis are aggregated into an overall consolidated view and the big picture, as we already heard. And with the increasing implementation of IPSAS and accrual accounting at single entity level in many countries, now many technical and organizational questions arise, and this is why we are conducting this workshop actually. So what are some of the issues, and many speakers before me already told that we can have a full week of a conference talking about challenges and issues in consolidation. But let's summarize them very briefly. And I want to kind of first look at the scoping, the parameter, as we already talked about that. And what was mentioned already, and I think Giuseppe, you mentioned that, is does it make sense to consolidate very heterogeneous entities and kind of to risk having no clear messages coming from the consolidated financial statements? So very often, I think, as it is the example in Switzerland, for example, the big banks are not consolidated into the government consolidated financial statements in order to avoid blurry pictures. But, and I think that's what Sahe already said, it's important then to provide transparency by disclosures. So you have to make clear what is in and what is not in. We already heard about the large number of entities. I think that is definitely a difference between the private sector and the public sector. In the private sector, I think if you consolidated 50 to 70 entities, this is already large. Here we are talking about many, many more entities. As an example, and Lithuania is only a small country, obviously they already have 3,600 entities that from a conception point would need to be consolidated. How do we address that? Obviously by applying the concept of materiality, as we already heard from other speakers. So to exclude very small entities or immaterial entities, not having majority of assets or liabilities, not carrying a lot of risks, and disclose what you have excluded from the scope. We talked about sub-consolidation already. Sahi called that phased consolidation. The question here is it helpful? Is it meaningful? Does it provide an interesting picture on not only from an organizational point of view, but also from kind of like a policy perspective? In Germany, we apply what they call the principle of ministerial autonomy. That means that every ministry consolidates the entities which are controlled and directed by this ministry. And by that, you get like a kind of a picture of responsibility. So very often, therefore, sub-consolidations can help in managing the large number of entities, and it increases the responsibility and accountability of these departments. We already talked about the different notion of control. We heard a lot about that. Its differences, especially in the ability to affect the nature of the benefits. It's the affecting part which is different, and the benefits part which is different. We are not only talking about financial benefits, but also about non-financial benefits. So very often it's not coming or kind of being based on what is the majority of shares and who controls the majority of shares. We also heard about the aspect of autonomy, which is a very important point as well. So how do we deal with that in practice? In UK, for instance, we see that there is one central body deciding on what is in the scope of the consolidated financial statements. So there is no room for interpretation left to the preparers on the different levels of government. It is predefined by a separate body. So issue number 2, and we talked about that already, and I heard that you discussed that already on the first day, which is differences between the separate accounting frameworks. And obviously, there are differences between the accounting frameworks of the controlling entity using IPSAS and the public corporations using IFRS. These differences can result from 2 kind of major parts. One is the conceptual issues. Where is the public sector conceptually different? And others can result from convergence issues. So there is a delay in the alignment of IPSAS with IFRS. I think Dimitri already alluded to that, how you can deal with that or how you have to deal with that, because obviously, as we already heard, the issue of an economic entity providing a single picture of kind of truth, let's say it like that, requires in general the application of unique accounting policies. And how can you deal with that? From a formal point of view, obviously, by using a harmonized chart of accounts as a basis for the economic entity, including a mapping of the individual financial statements accounts to the group chart of accounts, using standardized reporting formats and templates, but that's only the formal point. The material, the accounting perspective is that obviously you have to analyze where are differences which are really significant and material. If they are not significant, just exempt them from alignments and adjustments and focus on what is really essential. I think Sachin talked about that as well. Consolidation of foreign government-controlled public corporations, I will skip that. Interesting is the aspect of different reporting dates. Sometimes you have the reporting date of the controlling entity, which is, let's say, 31st of December, but you have corporations which have a different reporting date. How do you deal with that? Obviously, the solution is to define a corridor in which reporting at different reporting dates is consolidated after only adjustments for material effects, let's say 3 months before and 3 months later, you only adjust the financial statements. If it's kind of a larger point or larger time corridor, they have to provide interim financial statements. Last but not least, organizational challenges. I see I'm good in time. I rushed through. So we heard already about IT requirements and processes. And actually, I think there are 3 aspects which we have to deal with that. 3 levels which we have to look at that. It's different IT systems or ERP systems at the single entity level. We talked about that already, sometimes leading to technical problems like digital or the limited number of digits for accounts. So and mapping is not easily possible. The second level is the IT system to provide information, to provide reporting packages to the controlling entity. We heard about that also by Andreas. Very often still Excel is in use to kind of meet that challenge. And again, I can calm you down. That's also the same in the private sector. We find that very often in the private sector as well. And the third level is then the consolidation software itself at the level of the controlling entity. And the question is the same consolidation solution used for all subgroups within the government. The last point here is the sometimes missing central power over and related management of subsidiaries. I really want to focus only on one point, which is the third bullet here on the right side, which is the clear allocation of consolidation tasks. And that's going back to something which Sachin already said. Who is doing the adjustments? Are the adjustments done on the single entity level, or are the adjustments done on the level of the consolidated entity? You can allocate that responsibility to certain levels, but you have to be clear who is doing what in order to avoid inconsistencies and unneeded complications. So further consolidation challenges. Very brief here, because many of that has already been mentioned. It's elimination of intra-group balances and transactions, obviously, and very often the main problem is the identification due to inappropriate postings on the single entity level. If you're not using the right account, you will never find the intra-group transaction. It's timeliness of reporting. Obviously, you are on a high pressure and kind of a very often needed long preparation time kind of dilutes the value of the consolidated financial statements in the end. Sachin already talked about reliability and quality of reported data. The clear recommendation is to kind of make the reporting packages aspect of auditing by the auditors of the single reporting entity in order to improve the quality. Capacity and competency is very often missing on the single entity level, obviously. Dynamic environment of public corporations. There's very quick and rapid changes in businesses, in governance and accounting and reporting requirements of public corporations. We talked about segment reporting already. Most governments do not use the respective IPSAS standard 18. They follow COFOG and ignore what the segment reporting requirements of IPSAS are. I've never seen actually IPSAS 18 being applied. Andreas, I think you can confirm that. And last but not least, we have conceptual issues where we already talked about that, especially different notions of income, for instance, in the public and private sector, leading to different presentations of that. So with that, Armin, I gave you back some time for questions. Thank you very much.
Excellent. Excellent. Thank you for time. Let's now go to the questions. I think let's use this unique opportunity of the distinguished panel covering all the consolidation aspects. And let's go one question. Just raise hands. Let's start from Juanes. Just a sec. We need to probably earphones.
I will speak Russian. I'm Agadas Petrosyan. I represent the Chamber of Accountants and Auditors of Armenia. I have 4 questions. I'm not sure, do I ask them in turns or all together? All together. Okay, let us start. All questions are hands-on. When you do adoption, there are many questions. Conceptually, I understand all this, but when you adopt, you have so many questions. They're quite difficult. And people just don't use what we adopt. Question 1, at the level of the government, transactions are usually non-exchange transactions. And at the level of institutional units, these are exchange transactions. And I have a question, when we do consolidation, we need to adjust for everything. And this is a major problem if we prepare financial reporting at 2 levels. Maybe it is feasible if the government is consolidated at high level, the transactions should be considered non-transaction, and at lower level, they should also be considered non-exchange transactions to facilitate the consolidation, to make it easier. It's the first question. The last speaker mentioned, as I remember, as I understood, there are problems when commercial entities are consolidated. I asked this question on day 1. Maybe it is feasible. The commercial public entities which are consolidated, maybe by default, they should do accounting according to IPSAS, and according to FRS, they should do adjustments. Because most likely, the users of this information will be state users. And so the third question, the objective of preparing financial reporting on IPSAS and JFS is to provide financial information for effective public administration. Maybe it is feasible to combine those. We have many problems in practical level when we start using those frameworks, and it is very difficult, and many issues just appear and people don't pay attention to them. And also JFS has very difficult approaches. I asked many people, I asked representatives of different countries, and no one could answer that they're using those. For example, it is just written and we just do adjustments. It's a very good word to make adjustments. And the last question, in JFS system, there are assets which are not envisaged in IPSAS system. For example, the natural resources. This is not envisaged in IPSAS framework. Also, there are non-produced intangible assets which the state owns due to its illegal status. And also there are high-value assets in JFS, and they're non-existent in IPSAS. Maybe we should synchronize those 2 aspects. Just an example, the last one from our experience. On the basis of IPSAS, we established our standards. It is called approved it, and we include GFS there, and we do accounting of natural resources. We should do accounting. I'm not sure if they do it, but they're supposed to do this accounting of natural resources. Thank you.
Thank you very much. Any other question in this row, like 4, just to see? Okay, then we can capture those. The first one, non-exchange transaction unit level. Who would like to go first? Yeah, Andreas, please.
Yes, I mean, it's obviously one of the difficulties, if I understand you correctly, that sometimes different levels of governments classify the same transaction in a different way. And of course, this is posing really a challenge in consolidation. Now, what you can do there perhaps is you can, in transfers, you often have conditions attached. You can also include reporting conditions and say, well, they must be reported as a grant, for instance, also using a specific account in the chart of accounts. So you can do that, but of course it's never 100% foolproof, I would say, because still the local government might do differently. But I think my experience, you can handle that. But I hand over for the next question to someone else.
Yes. Ross, would you like to add on this one? Or? Good. So then second question is about business, government business entities, market producers. So who would like just to cover that one? The point was whether SOEs or government business entities, question was whether they can follow IPSAS and then report their financial statement based on IFRS, because they are. Who would like to cover it? Thomas? All the heavy questions to Thomas.
Thank you. No, and actually, I think the solution normally is the other way around. Probably you provide your financial statements, because there are requirements for that, either on statutory accounting or on IFRS. You provide them on IFRS, and then you do the adjustments in the reporting package based on IPSAS. So it's normally the first primary accounting framework would be IFRS, and the secondary would then be IPSAS. Technically, you can solve that by having separate account levels in your ERP system. You have IFRS accounts, and for the same transaction, you have adjustment accounts according to IPSAS, so you can kind of solve that technically.
Yeah, Giuseppe. Just the question was whether, because whether government business entity can use IPSAS as a primary accounting and then use IFRS for reporting purposes for presentation with adjustments. But yeah, yes.
I think the question was
for non-commercial entities, the question was also covering non-commercial entities, so it's only about commercial.
The question was on commercial public entities, because ultimately they are consolidated in the group. In this group, they are consolidated. Maybe it is feasible for them to do accounting on IPSAS, and then we do adjustments for IFRS into IFRS, because what is dominated here is the consolidated financial reporting of the governments.
Thomas and then Ross, please. Thomas.
I didn't understand the addition, but if that is the question, I provided advice to the Saudi Arabian government when they started their reform in 2017 by translating the standards, the IPSAS standards, into national standards. And one of the important questions was which of the entities would have really to apply IFRS and which would have to apply IPSAS. So I think that's actually the primary question. You have to go through the entities to decide whether they are market transacting or non-market transacting and more policy supporting entities. And then you make the decision of the most appropriate accounting framework. And in Saudi Arabia, they decided for a fund, let's say, okay, this should use directly IPSAS, and others which are more market related, they should follow IFRS straight.
Thank you. Ross?
Yeah, just to add on, and similar to a point I made on Tuesday, because our standards are derived, or some of our standards are derived from IFRS, and we're aligned in terms of the accounting guidance. When you set your accounting policies for those controlled corporations, I would try and align those accounting policies with the central government where possible so that you don't have adjustments. I think practically that is available because of the link on especially commercial type transactions between IFRS and IPSAS. So if you take the time in planning, I think the consolidation issue doesn't matter as much which framework you're in, because especially for commercial type entities, all of the accounting requirements in IPSAS are covered. We didn't take anything out of the IFRS. We adapt and add for public sector transactions. And these commercial type entities that are controlled by the public sector, undertaking normal commercial type arrangements, all of the guidance would be aligned that you could use in the IPSAS. So it doesn't matter as much which framework you pick. It's the accounting policies you decide to implement for those entities. And again, aligning those for consolidation purposes to the extent possible. Thank you.
Thomas, and then Giuseppe. Okay, good. Yes.
Just to add to that important point, Ross, I think when we talk about conceptual accounting differences between IPSAS and IFRS, from a theoretical point of view, it looks like huge. If we look at standards like IPSAS 23 or IPSAS 21 or things like that, or but if you look at the practicalities, I think in the end, it's not that many transactions, let's say for a public corporation where you would apply an IPSAS 23 standard, because they don't have non-exchange transactions, they don't have non-cash generating assets where you have a conceptual difference in the accounting. So from a theoretical perspective, yes, there are differences and challenges, but when it comes to practicalities, I think as Ross said, everything what is covered in IPSAS normally is covered by what is covered by IFRS is covered by IPSAS as well.
Excellent. And probably the one is going to react, and if it is so similar, why we don't use the IPSAS, just the basis. I think for government business enterprises, we should not look only from consolidation perspective, but also there are different users, and we have PPPs, we have private sector, and it's not only from the lenses of consolidation. Your logic may make a lot of sense, but let's from looking broader, because the objective is not only consolidation, it's also about stakeholders and so on. And from that perspective, probably IFRS customers and suppliers and creditors and investors and so on. So that perspective can make more sense to make it IFRS and then consolidate using IPSAS. Dora, I have questions, but let's.
We all accept that the objective of financial reporting on IFRS is, first of all, to meet the needs of financial information for the owners, the owner who invests money. In this case, the government is the owner, and the governor is the investor, and the government controls the company. And this report should meet the needs of the state, of the government. There are no other investors. There are no major investors. The controlling entity is the government. So we need to think about the interests of the government first. We have other users, but
the reaction to summarize on that one is that there are no major disconnect, and on materiality principles they are similar. So in the bottom line is there are similarities first, and second, again, it's not only from shareholder but broader perspective. And yes, Andreas. Andres and Giuseppe, yes.
Just a very brief addition. In Switzerland, we do use for some, very few, but for some state-owned enterprises, IPSAS, because, as you said, the government controls them, and so we have harmonized it on that basis. It's an exception, but we do.
Please don't break our conceptual Giuseppe framework. Just example of which enterprise you are talking about.
It's just, for instance, the fund for the financing of those tunnels through the Alps. It's very special purpose entities. It's not really
market.
Yeah, they are sort of semi-commercial, and so it's yeah.
Thanks, Giuseppe.
So I see that you are stressing GBEs, government business enterprise, and I understand because there are a lot of diversity between these entities. I can provide you one example. In Sweden, they have 50 state-owned enterprises, and they are all private legal entities. So that's an important point. If I understood well IPSAS, and maybe Ross can help us here because he's the IPSAS B guy, is the legal form. If the legal form is public, they should use Ipsos. If the legal form is private, no, it's not the case. But I see that in some countries, this is the interpretation, that we have some GBS using private legal form, they are using IFRS, and government entities with public legal form, they are using Ipsos. So this is what's happening. But I see that in Sweden, they put this public policy assignment for specific government business enterprises under control of the state. But I see that they are still using private sector standard. But I leave the word to Ross, and I see that also Thomas has an opinion.
They are provoking disagreement on the panel and making my life much complicated. Yes, Ross, please.
Well, without getting into all the details behind it, a few years ago, the IPSASB did a project called the Applicability of IPSAs, which was about government business enterprises, state-owned enterprises, and which standards should be applied. And through that project, what the board decided to do was to positively describe the characteristics of entities for which IPSAs are designed, because the decision on which standards to use is a regulatory local jurisdictional issue to decide. So those principles are clear in the standards for which IPSAs are designed. And if you're not applying IPSAs, then you need to look to a national or IFRS framework to apply for those types of entities. So it really is up to the jurisdiction to look at the entity, the nature of its operations, and decide whether it is more of an IPSAs type entity, so more providing public services, or a for-profit entity, and determine what other standards to apply other than IPSAs. So we don't describe anymore, like we used to scope out GBs and use IFRS. We took that out because of the problems that was creating.
Exactly. Thank you very much. Now let's move to the third question. We're almost there. So GFS versus IPSAS, and the practice which was reflected that many countries just use IPSAS and they make adjustments for GFS. This is right, the point, and or GFS and probably more IPSAS and adjustments for GFS. Is this the way to proceed? Probably Sache can start.
Yes, thank you very much for that question. We find that if you use the IPSASs, but when you create your unified chart of accounts, you consider also the statistical reporting requirements at that time. Quite often the integrated financial management system can serve both systems equally well. So to me, the critical building block is a well-constructed unified chart of accounts that look not only at IPSAS's requirements, but also look at the statistical requirements, budgetary requirements, as well as management information requirements. And if you then create those small building blocks, complying with all of those informations, you can basically derive both GFS and IPSASs from the same system.
Please.
Thank you. Also, the chart of accounts is very important also to compile and consolidate the statistics, but there are three kinds of adjustments are remaining. For instance, because GFS is using the price, the current price to measure the assets and liabilities. Also, it's still necessary to do these same adjustments, and also because the GFSM 2014 has the criteria of residence. Also, it's necessary to do some adjustment with the different entities that is in the border. So the idea is also to have also even the chart of accounts will help us to construct the GFS statistic. The idea is also to have attention. We have continued doing this adjustment. Some adjustment we have to do to finally we have the product, statistic product. So there are like this kind of adjustment. We have to have in mind that. Thank you.
So the answer is just use the tools, chart of accounts, multi-dimensional, the one probably PULSAR also developed, and systems just to help you to manage the adjustments. Yes, the adjustments should be made. This is the.
Also, please look at the latest knowledge product on consolidation, because one of the main propositions there is the integrated consolidation and compiling process using both IPSAS and GFS. So this is something that could also try to avoid any inconsistencies discrepancies between accounting and financial statistics.
This was the ad part, right? 1 minute ad part, just promoting PULSAR products, which are really great. And the last point is about the GFS assets versus how do you versus IPSAS and how to synchronize, like it was referred to, the natural resources, high value assets. Okay, first, and then.
Thank you very much. GFS do provide some information on how to value natural resources. The information is very, how can I put it, young and immature. It still needs to be developed further. In the current revisions of the statistical manuals, they are looking at the valuation of natural resources again to try to improve the guidelines on that. And I know that from the IPSAS side, they are also looking at the same topic. So indeed, this is an area where both systems need to be further developed to provide better guidelines.
Thank you, Rose.
Yeah, thank you. Just to build on that. So we do have an active project on developing guidance for accounting for natural resources. We're just moving past the consultation paper phase. And in early 2023, we'll start developing exposure drafts with draft guidance. So again, it's a tough project. We're working on some challenging issues when you look at the conceptual nature of what's an asset, what can come on your balance sheet, and how to value those types of assets. So it's difficult to predict right now what that guidance might look like, but it is on the board's agenda. They have been working on it for about 3 years now, and there should be exposure drafts within the next year to 18 months with proposals on what IPSAS proposes to do in terms of accounting for those. And I would say there's probably a broader link to what we do here to non-financial information and broader sustainability reporting on this topic, in particular, natural resources. And just another plug to a project we're about to finish on measurement, which will bring in more public sector current value measures into the IPSAS, which will help with the GFS reporting issues you're talking about, where you'll have options within IPSAS to do a current value measure for accounting purposes, which will make the data more useful for other purposes, including GFS reporting.
And then IFRS, how you will reconcile? Okay, then we'll talk about IFRS reconciliation. This is the different problem. I think they are happy with this reaction. So I think we can easily skip the coffee break, right? We don't need, we need only knowledge here and the knowledge and sharing this. But let's applaud to our distinguished panel members covering like these topics and very challenging questions. Thank you very much. Thank you. Now let's break for, Dmitry was saying 15 minutes, probably 20 minutes, and let's come back in 20 minutes sharp, which makes 15, yes, 11:45. Please, 11:45 sharp back here. Thanks.
Colleagues, good morning once more. Thank you for being back on time. We will continue with our second session. Now we're going to listen from our country colleagues about their country experiences, also in terms of the consolidation and then use of different accounting and statistics approaches. Let me briefly introduce our speakers for this session. In alphabetical order, we are going to start with David. David Gamkrelidze is now head of State Treasury of the Ministry of Finance. Now he is the boss. And it's great to have him here. You know, David is one of the older members of the PULSAR team, and now he's the head of the State Treasury of Georgia. Dritan Fino is the director for the Directorate of Harmonization for Financial Management, Control and Accounting from Ministry of Finance of Albania, and most of you also know him well. And Ludmila Haponenko, head of the Accounting Methodology Department and Regulatory Support and of Auditing from the Ministry of Finance of Ukraine. We also have a fourth speaker who will be connected remotely from Lima, Peru. Unfortunately, it was a little bit difficult for him to be here in person. He is Oscar Gustavo Núñez del Arco Mendoza, Director General for the Public Sector Accounting from Ministry of Finance, Peru. and he's also the president and the chair of the Forum of Accountants General of Latin America, FOCAL. By the way, several colleagues from FOCAL, they are connected via Zoom since early morning. You know, now it's 5, 6 a.m. in the Latin America, but they were very excited about this event, and then they are joining us remotely. I will be moderating this session, and well, my only request for the speakers be as executive as possible, so we are able to finish this session on time before the lunch. Thank you.
Thank you, Dmitry. Good afternoon, everybody. So it is my pleasure to be here again, to see you again. So glad to be back. Thanks for having me. So it is my honor to guide you through today into the process of accounting reforming in Georgia, in my country. I mean the evolution of the function, accounting as a function, also the milestones achieved in the process, the challenges we faced during the process, and the ways and measures we took in order to overcome those challenges, with particular emphasis on the consolidation part, obviously. So the accounting function in Georgia, I would say, has become an integral part of public financial management system at large. So let me start with the PFM. We view PFM, we consider PFM as a chain of rules, systems, and processes where the strength of the chain is limited to the strength of its weakest link. In other words, we try to keep all the chains, so all the ingredients of this process, equally balanced, equally strong, so that to have the efficient, effective public financial management system in the country. And one of those areas, one of those important links in the process is exactly the accounting function, and specifically public sector accounting. So the primary ingredients in this process is, let's say, comprehensive, effective, and transparent public financial management on the one hand, and also ensuring the safe and efficient investment of public funds, which is a relatively younger part of our public financial management system, but still an important one and kind of a add-on on the accounting, on the achievements we have had in the accounting area recently. So in other words, in order to accomplish the mission of the State Treasury, we are trying to provide the simple, user-friendly, and transparent systems for budget users. Also to implement international public sector accounting standards. Most importantly, to provide accurate and timely accounting and reporting on budget and related operations. So in other words, one of the primary functions the Treasury's mandate envisages is providing accounting and reporting, as well as budget accounting and reporting. So financial and the budget, both are under the Treasury's mandate. And of course, based on all of this, having the centralized oversight on the government financial standing, it helps us to progress with other areas, like, for example, the efficient investment and safe investment of public funds, which is a relatively younger direction of our PFM and quite successful. It proved to be quite successful one. So based on all this, we consider PFM as the chain of those three primary areas. So international public sector accounting standards on the one hand, which is the undergoing process still, I mean the implementation of those standards. The public financial management information system that needs to support all of these processes, and not only the accounting one, but also the budget execution process, and the liquidity management or cash management, which is kind of an integral add-on to all of those other dimensions of the public financial management system. So by the way, in each of those directions, we have experienced quite fruitful and quite result-oriented cooperation with many international institutions, including the World Bank, first and foremost, for which we are quite grateful. So using Ipsos, we are aiming at building trust and credibility. It has been mentioned and raised several times during these days. I mean, the point about the trust and credibility, that it is kind of a decisive one, together with improving the transparency and accountability and strengthening the public financial management system structure as a whole. We are aiming all of those things through improving the quality and reliability of the accounting data, and also enhancing the macroeconomic analysis and forecasting abilities. So we see quite a lot of benefits in introduction, accrual-based international standards, but on the other hand, there are quite a lot of challenges. I'm going to speak about them in the upcoming slides shortly, that need to overcome in order to attain and arrive on those benefits. So Ipsos implementation process goes back to 2005. Around 2005, it was a moment when the starting moment when the Treasury obtained the mandate to lead the public sector accounting reform in the country. Then Ipsos implementation strategy has been developed and approved in 2009. It was followed by standards board establishment, which is quite a high-level board. Treasury staff have been trained as trainers in order to support other organizations in the process. And also Ipsos standards have been translated into Georgian language, which is, I think, the essential prerequisite for successful standard implementation. So the next stage was piloting. The approach we have selected can be characterized as a phased approach, the one that our IMF colleague already talked as one of the kind of essential prerequisites when you approach large-scale reforms. So the next stage was piloting, which was covering basically preparation of financial statements by the pre-selected pilot organizations, as the title suggests itself. Then we moved to modified cash-based methodology, which was approved and adopted across the state budget or central budget funded organizations. Then gradually to limited accrual method requirements, which we are reflected in accounting and reporting regulations. And finally, 2020 have been kind of a game changer in the process, because 24 standards out of around 40 existing have been adopted successfully on the central budget level, first and foremost, and the local entities are also providing, it's already 1 year, they are also providing their financial statements based on those international standards. So at least 5 phases have been covered during the process: initiation, piloting, to phase of transition, and finally the adoption. Of course, this would not be possible without the proper regulatory basis, legislative basis. So a couple of instructions have been developed by our accounting team, like instruction on accounting and reporting, chart of accounts, and we already talked about the importance of the chart of accounts in the process, and I will not stop on this. Also instruction on preparation and presentation of financial statements by the budgetary units, and also some separate instructions like on depreciation, amortization, and some other related topics. So on top of the general kind of legislative basis, we have also developed the internal So we have already given kind of a flexibility to individual organizations to develop their internal regulations, governing their individual processes on their individual places, like internal methodological guidelines and rules for accounting and reporting in the form of internal accounting policies. So those individual spending entities, budgetary organizations, they can and they should develop their own accounting policies that should be in line and must be in line with the international standards, with the local requirements. Actually, local requirements reflect the international standards. Also, for their managerial accounting purposes, they can also develop more detailed chart of account. Also, some forms reflecting the economic events, and they can come up with the terms of preparing and processing accounting information, internal procedures of submission of those financial statements, and internal control systems, because you always need to make sure that you have enough control in place so as the data quality is guaranteed. So apart from legislative base, I'd like to go into more depths into the consolidation process itself, particularly the stages of preparation of consolidated financial statements. So the phased approach can be observed here as well. So consolidation happens on different layers, like the lower level consolidation is carried out by the individual spending institutions, like individual ministries. They prepare their own consolidated financial statements. Those spending institutions, once they prepare it, they provide it, they submit those financial information to the state treasury in the form of their individual consolidated financial statements by April 1st. So they have 3 months until after the end of the reporting period. And then higher level consolidation takes place at the state treasury. So this is the particular moment when this treasury steps in the consolidation process, and treasury prepares the consolidated financial statements for the whole government and publishes it within 6 months after the end of the reporting year. So it's already since 2012 when all consolidated financial statements, well, it have been aggregated. Initially, it's more kind of consolidated at the moment. It's already more than 10 years or around 10 years that it is made available to the all interested parties, like society or any other stakeholder, through the Treasury's official webpage and easily accessible to them. And of course, important point here is that those financial statements are also submitted to the State Audit Office, Auditor General, for further examination, for further comments, and so on. Some of the technical aspects of preparation of consolidated financial statements are quite common. I do not think that I will say something exceptional here, because the preparation of financial statements is mandatory according, and it should follow the basic principles of internationally acknowledged standards. Transactions like the transactions between the entities subject to consolidation are eliminated, of course, during the preparation of the financial statements. And the statements are prepared like those transactions have never been happening. In case of accounting policies differ, the controlling entity, the one who controls, must make some appropriate adjustments when preparing those financial statements. And also there is kind of a responsibility moment put into the legislative base. So the head of the unit is responsible for the proper presentation of the financial statement. So the forms of financial reporting are quite common, nothing new here as well. I'd rather stick to the coverage of the financial consolidation, like it includes the central budget organizations, first and foremost. For example, the ministries, as well as other spending institutions, budget organizations, around maybe 1,500 different organizations. Also the municipalities and autonomous So we have up to 70 different municipalities, and we have 2 autonomous regions. They are also obliged to prepare financial statements based on the IPSA standards. It's already more than 1 year they are doing it. So we started with the central budget institution, and it was followed by municipalities and autonomous later on. So they also provide their financial information in the form of financial statements consolidated on their individual level. And this information is also included as an attachment to the whole financial consolidation package. So what is not included is the state-owned enterprises, which is kind of a gray area at the moment, how to do it, how to proceed with that. So I think it will be important and interesting topic to tap on during our future discussions. Okay, so the primary challenges have been the system. We are working on the general ledger system. In the expenditure part, we are okay, shortly saying. In the revenue part, we are missing some of the items. So during upcoming period, we are going to kind of finalize the adoption of this general ledger, which will make the accounting information to be processed in an automatic manner and in a full scale. Of course, the human and time capacity, this is, I think, also common to all public sectors among the countries and across the countries. The resource scarcity in the field of public sector accounting remains kind of a challenge in all countries, I'm sure. So just a couple of benefits we have observed. It is first and foremost about the clear picture, more clearer, therefore better quality data, which means better quality planning potentially. But again, in order to make those data fully utilized, you need correct people, correct places, educated people. That's why it always makes sense to have this kind of communities like FinCoP, EduCoP, working together and sharing not only the practical aspects, but also the educational and academic aspects as well. So better monitoring of assets like receivables, other types of assets. So for the sake of time, let me move to my final slide. So lessons learned again, but in terms of needs, the separate consolidation module, this is something that we have observed is so module designated directly and designed for consolidation only. This is something that seems to be decisive in the process. Staff training, we found that better trained staff provide better. So there is kind of a correlation, staff training and better quality financial statements. Internal accounting policies are quite helpful, and a couple of ministries are working actively in Georgia to develop their internal accounting policies. Benchmarking and learning from peers from other countries in these kind of settings is also quite important. Cooperation with the international institutions, I already mentioned that we have experienced a lot of and very kind of fruitful interaction with many agencies, including the WorldBank during past 2 decades. And expanding the Treasury single account coverage also proved to be quite an effective tool for proceeding further with the accounting reform, and not only. Okay, that's it from my side at the moment. And having that said, I will let maybe Dmitry to continue this session, and then I'll be ready to answer your questions, if any. Thank you.
Thank you, David. Please keep your questions to the end of the session, and we will continue with Dritan Fino. The floor is yours.
Good afternoon, everyone. Thank you for giving me the opportunity to express and share with the participants, with colleagues from the region, our experience in relation to the consolidation process. As we heard, it is a difficult process. It's not an easy one. And definitely, we need to listen and hear from each other and take into consideration the challenges that each of us is facing in order to facilitate the implementation of this important process. I'll try to share with you what are the current practices in our country in relation to especially consolidation, I mean, that kind of consolidation that we do now, and what are our plans for the future in order to implement accrual accounting. We already, let's say, committed to move to accrual accounting. We already initiated the reforms to implement accrual accounting based on IPSAS. We are in a stage now where we are preparing all the necessary infrastructure, and in the near future we will start implementing the IPSAS or accrual accounting instructions based on IPSAS. What is the current situation in Albania? I mean, Albania is a small country, has a two-tier level government system. We have the national level where the government policy regulation is prepared, which is mainly the line ministries. The line ministries and which are subordinated to the prime minister. Then these policies and regulations are implemented by agencies which are subordinate to the line ministries. Then we have the local government level, which is comprised of municipalities and regions. And then line ministries have functional responsibilities and are responsible to exercise internal control procedures within their ministries. They prepare and submit their budgets, proposals, execute the approved budgets, make expenditure, procure goods and services, and report the performance to the Ministry of Finance. Local government, on the other hand, consists of municipalities and regions, as I said, and they perform their own financial management and other duties of self-government. They prepare their own budget, they execute the approved budgets, and they enter into contracts and conduct procurements. Regarding the public sector classification, we aim to classify all the spending units in terms of GFS in line with ESA 2010, which is published by Institute of Statistics. So based on this classification, we have 4 main groups. We have the budget spending units of public administration that includes all units classified in the general government sector, and according to subsectors, such we have central government, local government, social health and insurance funds, units classified as extra budgetary, which are also included in general government. Then there are spending units classified as non-financial public enterprises, spending units classified as financial public enterprises, and the central bank. And we have in total about 1,288 units classified, divided by on the classification that I mentioned. As for the regulatory framework, statutory framework, I mean, we have a tradition of written law. The supreme legislation is the Constitution. Then the principles of constitutions are elaborated in laws. The public finance management is mainly regulated by 4 main laws, which is law on financial management and control, the law of management of budgetary system, the law on internal audit, and the law on supreme state institution. Then the principles that are regulated in the law, that are, let's say, defined in the law, they are further explained or clarified in sub-legal acts, which are in forms of Council of Ministers decision, of councils of municipalities decisions, orders of head of institutions, instructions, and manuals, which are all sub-legal acts that, as I said, detail the legal requirements. As for the accounting, public sector accounting, currently we have, let's say, a little complex, fragmented legal requirements regarding the public sector accounting, and one of the main is also that we started reforming accounting was also this let's say legal context, which we had to clarify and specify a lot of things about how to keep accounting. Although the main requirements for the accounting are expressed in the organic budget law. And regarding the organic budget law, we in Albania have adopted a modified accrual system based on which expenditures are recognized when they arise around their date of payment, and revenues are recognized on the date of receipt of the payment. Then this law also establishes the obligation of government entities to maintain an accounting system and prepare annual financial statement based on the Ministry of Finance instructions and manuals and guidelines. Then it defines the Ministry of Finance as the main responsible institution to prepare the public accounting, public sector accounting standards or methodology. It is defined that the public internal financial control board would be the body that would review and approve the public accounting standards methodology. Also in this law, it is provided the obligation of the Treasury to maintain a system of accounts and reports on government operations, including preparation of annual consolidated financial statements for the general government, the composition of the consolidated annual budget report prepared by the Ministry of Finance, which is submitted to the government, parliament, and of course, Supreme Audit Institution. Regarding the reporting, based on legal and sub-legal requirements, I mean, the main reports are related with the budget execution. So the budget execution reports, which are actually extracted from underlying accounting records, and those are the primary means. These kind of reports are the primary means of managing public sector financial and fiscal positions. However, we do prepare also periodic financial statements. These budget reports are prepared on a cash basis, but we do prepare also periodic financial statements, which are prepared in accordance with accounting instructions, which include certain non-financial transactions such as accruals and transfers on fixed assets, where there are no cash flows or where the cash flows will arise in the future period. Based on the legal requirements, all financial reports, including the budget implementation reports, are prepared and presented for each calendar year ending 31st December, according to the following timeline. We have the entity level financial statements that are prepared by March 31st of the following year, consolidated group level financial statements that are prepared by April 30 of the following year. The Ministry of Finance submits consolidated budget reporting for the general government sector to the Council of Ministers by May of the following year, and the Council of Ministers submits the consolidated budget reporting for the general government sector to the National Assembly by the end of June, and then after approval by the National Assembly, the consolidated budget report for the general government sector is published on the official gazette. Then the organic budget law also established ACFIS, the Albanian Government Financial Information System, as the financial system through which the government of the Republic of Albania performs all processes of execution and financial reporting of the state budgets. It is comprised, and in this system is also done the consolidation process at the end of the period. The ACFIS is comprised of let's say, 5 main parts, which is the budgeting, pre-commitment payment management, revenue and cash management, fixed asset management, and accounting financial reporting part. And as for the consolidation process, as I said, we are moving to transition to accrual accounting, but during this period, we try to provide some transitional provisions for the public entities in order to consolidate some in order to be prepared for what is coming. And based on our requirements, the public sector entities need to submit information about financial resources and their allocation, consolidated information about the way of financing the activities, provide information related to the unit's ability to finance activities, as well as to provide information for the performance evaluation of the reporting units. And of course, they are required to prepare consolidated financial statement, financial position, financial performance of statements of change in assets and net funds, and financial statement of cash flow and changes. Also, we require them to prepare consolidated statistical statements for investments and sources of their financial and long-term assets, and as well as providing explanatory notes for the preparation and reporting of the consolidated financial statements. Based on our accounting instruction, the financial reporting process goes, the normal stages of recording, then closing the accounts, making necessary adjustments, consolidating then the accounts, making the necessary analysis, and then reporting, as I mentioned, of these statements and based on the legal and sub-legal requirements. But these are some, let's say, short provisions that we require without detailing too much, and this makes it a little bit difficult for the public entities to implement fully, or as they should, the consolidation process. So we are now working on detailing, and we have already provided some instructions which are still in draft in order to make the consolidation in line with accrual accounting. We heard here that, what is important, the first step is to, since we are moving to accrual based on IPSAS, we need to clarify the concepts of controlled entities and controlling entities. So this is based on the 3 criteria that were mentioned here. And then based on this, after assigning with accuracy which one are the controlling entities, then the control entities and the controlling entity need to ask these control entities for the necessary information. Then, of course, the consolidation we have, where we have detailed in this instruction for the public institutions how to do the consolidation process. We heard here what are those main steps. We have, let's say, consolidated them in seven main steps to follow. To harmonize accounting policies, which most of the entities in Albania, they are harmonized since they use the same accounting policies. Then the line reporting dates, translation financial statements, and combine line by line the statements of financial performance, statements of financial position items, cash flow statement items of the controlled entities, eliminating full inter-economic entity balances, account for non-controlled interest, eliminate the investment of the controlled entity against the net assets of the economic entity. And then, which is the last slide one, are the requirements for the disclosure, which the main disclosure should be in relation to the composition of the economic entity, the list of the controlled entities, the interest and non-controlling interest held in economic entities, activities, and cash flow, and the nature of and changing the risk associated with the entity's interest in controlled entities and consolidated controlled entities and structured entities that are not consolidated. Currently, we are in a stage that this instruction we are piloting it in 7 public institutions, and by the end of this month we will see how this process is going, and after that we'll try to then make the necessary legal and sub-legal amendments to roll out to all public sector units. So thank you.
Thank you very much, Dritan. Without any further ado, Ludmila.
Good afternoon, colleagues, and good afternoon, dear participants of today's panel discussion. As I understand, we will start our interpretation now. I'm not sure how about you, but I did not expect to spend my first day of winter in Vienna. This is great. Congratulations to all of you on the first day of winter. I would like to thank the speakers, the previous speakers of the previous panel. It was very interesting information in practical terms. So I reviewed my presentation that I prepared, and as our time is limited, after me, as I understand, we have one more speaker. After that, we will have lunch, and in order to have enough time to discuss the specificity of consolidation of financial reporting in Ukraine. As I understand, the presentation will be published at the website, and you'll be able to review it later. I'll discuss the main points, which, from my perspective, from the perspective of the first panel, they will be interesting maybe for the participants of today's session. The consolidation of financial reporting, we can talk about this for 1 or 2 or 3 hours in each country. What are the prerequisites to consolidate financial reporting? These are legislation, the law on accounting and financial reporting, and the strategy approved by the government, the strategy by 2015, and now we have the strategy by 2025 with specific events, what we're supposed to accomplish. In Ukraine, at the moment, we have developed and we have 20 national standards of accounting. The participants, especially participants of today's session, who develop standards, work on IPSOS, they could say 20 standards. These are not all the standards of IPSOS and national standards. This is not very serious and not very reliable, but 20 standards include almost all IPSOS standards. And in order to understand if the accounting framework on national standards in Ukraine is in line, I mentioned this on day 1 or yesterday. In Ukraine, we conducted the diagnosis. Thanks to the experts of the WorldBank and their assistance, we conducted the diagnosis of the accounting framework and compliance with IPSOS standards. We have a very high percentage. As of 2019, beginning of the year, it was more than 80% of compliance, and only because some standards are not applicable, because we don't have the need to apply them. And once again, why national standards? And now I would like to do this diagnosis because 5 years elapsed. We improved the standards. There were changes to IPSOS. We harmonize national standards in line with IPSOS. We need a second diagnosis. Maybe it will be using the tool mentioned by Dmitry. Why national standards? Because in each country, there is its own budget law. Accounting is the instrument which enables to understand the information develops in budget entities, in local budgets, in state budget. This is only the instrument. It should be prepared according to IPSOS standards, but also we have budget law and we have corporate governance law for the public property. And speakers mentioned, even if they apply IPSOS anyway, they develop some guidelines to understand. We decided to adopt national standards, and we have ongoing harmonization with IPSOS standards, and we already built in the information on the budget process because it's the element of strategy of public finance management. Also ensuring statistical information is included there, and also tax law. What was the success factor? We had the cold shock, the way I call it, because our standards were developed and for 7 years everybody was reading them, and then suddenly we were reading standards for 7 years, and suddenly on January 1st, 2018, everybody started to apply them. And this shock, this positive shock for the budget system, we could just destroy budget system because over 1 quarter we moved from the old chart of accounts to the new chart of accounts. Our chart of accounts is universal for all. It is the unified chart of accounts. Local budgets, state budgets for the budget entities and for the funds. This allows to use it for developing budget, for developing accounting policy for each manager of the budget funds, for each administrator of the budget funds. The most important to understand the information how the ministry works, which was mentioned in the previous session, in the previous panel, it is to understand how we develop the unified accounting policy of the main administrator of the budget funds. So we have requirements on the one main administrator of the budget funds. We need to have unified budget policy. And we have developed the working chart of accounts, which envisages sub-accounts to disclose information which is necessary for this public agency. What was another success factor for the quality and transparency of reporting? Since 2018, we introduced the automated system of electronic reporting, e-treasury. I will discuss it later. And also training staff is very important. I understand that people are doing everything and only accountants. We can only argue and joke and understand the standards. Many managers or even economists don't understand those, but we can argue about this for hours. This is consolidation. Our consolidation goes for the local budgets, state budgets, the funds, and the main budget entities. This is shown in the slides. The slides will be available at the website. As regards we discussed the accrual basis. So the accrual basis in Ukraine. First, I forgot to mention that our treasury is dealing with, it is like a bank. It is doing transactions and also consolidation of reporting. It accepts reporting and consolidates the reporting. Methodology is responsibility of the Ministry of Finance. This is my department. It is responsible for methodology for commercial activity, for private sector, and for the public sector. The accrual basis are budget units use accrual method. It's very important because our budgeting, our macro financial indicators are based on financial reporting of the main budget units. So they include debt, advances, and we can have this information. The state budgets and local budgets and pension funds use the cash basis, but the accountants, they are also people who are entrepreneurs. They find solutions for any situation to have the information available. We introduced the off-balance account, or balance sheet account, this account 05, which reflects the conditional liabilities and guarantees. Our budget law doesn't ensure the guarantee. The budget doesn't ensure guarantee at all, but we need guarantee and we need security. So we have off-balance sheet accounts. For general information on long-term contracts, we also have off-balance sheet accounts and everything can be consolidated. As our time is limited, I will try to speak quicker. The forms of accounting with consolidation at the level of the ministry. The consolidation at the level of the ministry, another point. The ministry has the budget units and also state-owned enterprises. I will speak quickly to be on time. I apologize for that. I apologize in front of interpreters. Just to understand the main budget units, the ministry, for them to understand how the SOEs operate, their activity is targeted at profit making. We envisaged that in consolidated financial reporting of the budget unit, the money which is invested into the capital, into the equity of the SOEs, the equity of the SOE, the charter capital of the SOEs, it is reflected as the financial investments and as the equity interest. This this allows to understand the general amount of equity in the framework of the ministry, and also we can control the profits and also dividends received for the budget. Then consolidation at the level of the treasury. It is done. We have the forms here presented. We have the form, the notes to financial reporting, which is consolidated only at the level of the ministry. At the level of the government, it is not consolidated. We have digital and it has numeric and non-numeric information. It discloses the information according to the accounting standards. This slide presents the information on what is included into consolidation at the level of the treasury. And the next slide Since 2018, we have the software products at Treasury, which enables to file financial reporting for the budget units and for the main budget units, for the Treasury office to use the software to consolidate based on the codes of program classifications, codes of budget classifications, and the chapters of science, education, and based on statistical information, based on statistical requirements. This is the way we sign the documents, and so this slide, I'd like to discuss it in more detail. I understand we don't have time, but what are the benefits of this reporting system? Earlier, our consolidation was when the main administrator of the budget funds consolidated the information at the level of the ministry, as the administrators of the funds in the regions submitted information to the Treasury and to the main administrator, and we had consolidation, and then the main administrator of budget funds with the Treasury at the level of central Treasury did the verification. There was a double reconciliation, double process of consolidation. Is a lot of resources, a lot of nerves for the main administrators. When the system started to operate, now everybody submits reports, and starting with regional administrators of funds, they submit the reports to the system automatically submits reports to the Treasury, and we can consolidate on different areas. The main administrator of budget funds can also retrieve information from the Treasury on consolidated reporting. The only problem which is currently in Ukraine, there are two problems, not problems, but issues. The first issue is improving the consolidation of financial reporting. Why? Because the Treasury consolidates the local and state budgets and the administrators of budget funds. And we have the issue of exempting the subsidies and transfers from the state budget to the local budgets, not to duplicate this. It's the first issue. We'll try to improve this. And the second issue, we need primary product, software products for the accounting, because everything that is done in budgeting and financial reporting should be transparent. We need to have transparent products, software products for primary accounting, which would allow to upload information into the software products of e-reporting. We are working on this at the moment. And also wanted to discuss reporting during the war. I mentioned this before. We consolidate the reporting, although according to our legislation, we have the provision that the budget institutions and commercial institutions can file reporting in 3 months after the end of the war, and they can publish this reporting. But anyway, they still continue to submit reporting, and we consolidated the reporting, although it was February 24th, and our consolidation is on February 28th. We consolidated the reporting. Also, we consolidate quarterly reporting, and the only point, now we don't publish reporting, it is closed, because as I mentioned, this reporting is used for unfavorable objectives for Ukraine, but all information is available to the government, and this allows to quickly adopt the budget and to calculate what expenditures are needed and how they are covered by our revenues, to raise the issue on macroeconomic aid for Ukraine to support the most important areas for the war, the defense and social issues to support the population. This is it from me. Thank you very much for your attention. If there are questions, I'm ready to answer. Thank you.
Thank you very much, Ludmila. Now we have our next speaker, Oscar. If you're still connected, can we project our Zoom connection?
I'm here.
Ten minutes, Oscar, please.
Hello, you can listen to me?
Yes, we can hear you.
Okay. Good afternoon with everyone. Good morning with for Latin American colleagues. Thanks to Dimitri for the invitation. It's a great honor for me to have the opportunity to present some important issues about the experiences of Latin America region and Peru, my country. I prepared a small presentation with 4 topics. To start, I will talk about the objectives of FOCAL and the last meeting held in Mexico. After that, I think it is important to show you the status of IPSAS implementation in Latin America. And of course, the experiences about consolidation processes in the region and with more details in Peru. So what is FOCAL? FOCAL means the Forum of Government Accounting of Latin America. It was created in 2014 in Santiago, Chile. Its main purpose is to be a place for analysis, study, reflection, and exchange of experiences, knowledge, and good practices for the development of accounting models of a professional and technical nature for all the members' countries. Each year, the members choose the president who have the role of represent FOCAL in several matters, and also organize monthly seminars or technical meetings, and probably the most important assignment is to be in charge to organize and celebrate the annual meeting in each country. For the period 2022 and 2023, the executive committee is formed by the countries of Peru, Mexico, and Ecuador. In total, there are 18 member countries. The last to join was Venezuela. FOCAL receives the permanent support from International Development Bank, like the sponsor, and also maintain permanent communication with WorldBank, International Monetary Fund, IPSAS-V, and other important institutions related to the public sector and IPSAS. As you can see in the pictures, FOCAL has its own webpage where you can find different information about our countries, news related to our activities, photos and videos from annual meetings. And also we have a YouTube channel with more than 50 videos in Spanish and also in English and Portuguese. The last annual meeting was in Mexico from October 5th to 7th. It was a special moment when all the accountant leaders meet again after 2.5 years. That was the annual meeting in Brazil before the pandemic. The Mexico annual meeting comprised several presentations where the members' countries have the opportunity to share with everyone its experiences, basically in the IPSAS implementation and other topics. And also consider the special participation from Minister of Finance of Mexico, members of IPSAS-V, World Bank, University of Zurich, International Monetary Fund, and International Development Bank. You can see, for example, some topics were discussed, like the experiences from Uruguay, Ecuador, Guatemala, Panama, Mexico, and Peru. Also, the World Bank present the digital transformation in the public sector maturity index. The IMF present the status of information systems for public financial management. Chile present the municipal sector implementation, IPSAS. IDB and EY present the preliminary results of the study for sustainability reports in Latin America. Paraguay presents the budget programs linking to SDGs, and University of Zurich present the financial instruments. As you can see in the map, almost all the countries are involved in the implementation process of IPSAS. They choose different methods, direct or indirect. It depends on the technical analysis and legal situation. Colombia finished the implementation in 2018. In this year, they received an unqualified opinion from its audit supreme institution. This was a very important event after more than 25 years. The other country, more advanced, is Chile. They complete the implementation at central level and are still working for regional and local level. The other countries like Peru, Mexico, Ecuador, Brazil, Costa Rica, etc., are in progress and plan to finish in the next years. In the consolidation experience, the chart shows a brief compilation of the consolidation experience in all the Latin America countries, members of FOCAL. As you can see, 15 countries prepare consolidation financial statements. That means more than 80%. You can see that some countries who prepares a consolidated financial statement consider only the entities from central level, and in other cases, consider all the levels as central, regional, federal, local, and public companies. It is important to mention that not in all cases, the consolidation process considers the elimination of the reciprocal transactions. For example, Argentina, Panama, Guatemala, and Venezuela only integrate the reports and not eliminate the reciprocal transactions. Another important issue is that some countries include into consolidated financial statement the central bank. That is the case, for example, of Ecuador, Paraguay, Peru, and Venezuela. For other sides, there are countries that not include the central bank, like Chile and Dominican Republic. And also you can see the different deadlines to submit the consolidated financial statements to the Congress or to the Supreme Audit Institutions. The submission deadlines are between March and June and are established in the political constitution or in a specific law, so the country legislation. In other hand, the consolidation process uses, in some cases, technological tools and also manual procedures. In Peru, we prepare the general account of the Republic in accordance with 81st article of the political constitution, which required that this report accompanied by the audit report of the Comptroller General of the Republic be sent to the Congress of the Republic for its approval. The responsibility for this document is from the General Direction of Public Accounting that depends of the Minister of Finance. This is the most complete public sector accountability tool in Peru that contains information of an analysis of the financial budgetary, economic, equity results, and goals on indicators of financial and budgetary management of all the entities of the public sector without exception during a fiscal year. There are more than 2,400 entities who have the obligation to present all the budget and financial information. In the meantime, the public entities elaborate its financial report based on National Accounting Regulation, Peruvian GAAP for public sector, that have minimal differences with IPSAS. It's important to mention that in Peru, we use more than 10 years the accurate accounting for expenditure and financial position. And the public companies uses IFRS as framework. And also, it's important to mention that Peruvian budget comprises all entities, ministers, regional governments, municipal entities, public universities, and some transfers to public companies. We have 50 years preparing the general account, and since 2012, we prepare a consolidated financial statement, identifying and eliminating all the reciprocal transactions. The consolidation is only at high level. We cannot obtain consolidated position for single levels as national, regional, or local. These levels are contained in the general account as a whole and in segment section. This is our general account for 2021. The main information that contains is as follows. Consolidate financial statement and explanatory notes, consolidate budget information, the approved budget and the execution budget, and also the explanatory notes, information of budget programs, information of its investment programs and social programs, the treasury statement, the debt statement, the economic important information and statistical reports, the follow-up of audit recommendations, and a summary of main financial and budget information for all the consolidated entities. This is the process of the general account in Peru. So it starts in December when we issue the instructions for closing that comprise from the fiscal year comprised from January to December. So in February, the entities have to identify the reciprocal operation and make the reconciliations. In March 15, they present in a standard format the financial statements and budget information. So we integrate and consolidate all of this information, and in May 31st, we issue the report of the general account and send to the Congress and to the audit institution. In August 10th, the Controller General of the Republic of Peru issued the audit report, and in October, the Congress have to approve this general account. We use the special software named CIAF. So the entities report the financial and budget information using this software. And also we have consolidation, special made in-house software we call CCON. This software helps us to integrate, eliminate, and consolidate all the information. Only as reference for fiscal year 2001, we eliminate like $5,300 million that represents more than 18,000 reciprocal operations. And only for reference, the total consolidated assets is $292 million. So it's important to see the eliminations from the total assets. Thank you very much.
Thank you, Oscar. That was interesting, and thank you for covering the whole region of Latin America. Colleagues, it's almost lunchtime, but we could spend a few more minutes if there is any burning questions from the audience to any of the presenters. Yes, please.
Yeah, well, thank you to all of you for a wonderful presentation. I would like to ask David, on your slide, you told us about the staff training. Who does the staff training? Is it you guys? Is it some kind of separate entity that provides training? Can you please answer that question?
Sure, that's very relevant question, Nazim. Thanks for that. Well, first I'd like to stress out again that without staff training we could not accomplish that progress that we are at the moment. So that moment that we are reaching at the moment in terms of implementation of international financial standards. So technically, staff training is basically done on the academy of the Ministry of Finance base. So there is a separate entity, but within the Ministry of Finance, which usually undertakes this kind of activities. So all necessary trainings, capacity building activities that are needed in order to progress further with the reforms ongoing in the public sector, including the reform of accounting. So these trainings are usually supported with international institutions, with donor organizations, with developing agencies, as well as with the budget. So sometimes it's blended, sometimes supported with the government or with with other counterparties, outside counterparties, I mean. But technically it is usually done on the Ministry of Finance Academy basis. And we found this approach quite helpful because when you have this kind of body within the ministry itself, you are kind of more flexible into organizing, well, first of all, coming up with a decision what the needs are, because they have interaction with a lot of institutions in the public sector through and via different training occasions, so they can easily collect the information, what is the level of the staff kind of professional development, what the particular needs are, and so on. So then you can compile it, and again, based on their experience, compiled with our information, you can kind of plan and schedule effective and efficient training. So this kind of flexibility is on place.
Let me ask you one more question. I appreciate your answer. One more question would be in regards to my understanding. We're similar in many ways, and my understanding is that the public entities in Georgia, they submit their reports based on Ipsos, and as such, we are probably using accrual accrual-based accounting, right?
I mean, public institutions like ministries,
right.
not SOEs or state.
No.
Yeah. Yes.
On
exactly.
the other hand, I'm guessing. I guess that the treasury is cash-based accounting, right?
Yes.
So there might be a disparity at the end of the year, and this is very important topic for us because those institutions, they get down payment requests, let's say on December 28, 29, they reflect that in their accounting reports, which they later submit to the fiscal chamber, I guess.
Mm-hmm. Chamber of
Yes, Chamber of Accounts, Accounts of Chamber. So, and this very chamber gets reports from the treasury, and there might be, if you know what I mean, there might be disparity, like their liabilities, whichever they show in their books, and the one that we provide, there can be a difference. How do you cope with that? How do you handle that?
That's also a very good question. So what Nazim mentioned is true. I mean, the budgeting process, so all the treasury procedures, budgeting process is based on the cash basis, while the financial accounting reporting is based on the accruals, those 24 standards that I mentioned already implemented in the public sector. Of course, cash-based and accrual-based information differ, but they do not kind of create any problem for us in terms of submission of those reports, because at least the timing differs. So each month we are preparing budget execution reports for like Parliament, for other stakeholders, which is based again on the cash basis, while the financial reporting happens only one. Financial report submitted to the State Treasury happens only once during the year, which is 3 months after the end of the financial year. So they do not contradict with each other in a sense of making transaction, but even more so, they kind of fill up each other, they kind of help each other, like whenever the transaction is done, like expenditure transactions through the State Treasury IFMIS system, and we have the in-house developed IFMIS system, which operates on a consolidated Treasury single account principle. The accounting entry is also automatically generated on that transaction. So each transaction is followed by the relevant accounting entry. Therefore, the organizations that are under the Treasury Service have access not only on their accounts, like on their internal systems and internal data sets, but also the Treasury provides them important data set based on the transactions they have undertaken. So they can compile all of those data and based on this provide the accrual-based accounting and reporting by the so during 3 months after the end of the accounting period. Of course, cash and accrual methods create differences between the data. That's obvious, that's for sure. But the main thing is that those differences should be explainable. So Treasury's data can be, again, to just compile long story shortly, Treasury's data they have in the system, they can use in the process. Of course, it will not match cash data will not match to accrual-based data one-in-one, but still it can be useful for them to compile their reporting for their with the purpose of their reporting, reporting and accounting.
Madloba.
That was Georgian word saying thank you.
Thank you, David, for the great presentation. And I want to congratulate you, of course, for the reform process that you did. I have a question. You mentioned during your slides that your financial reports are sent to the state audit institution. I would like to know, are they audited by the state audit institution? And do they have certain, let's say, additional challenges in this part? And were they a part of your reform processes? Did they need additional capacity building? Were they included in the reform processes while you, let's say, made your law, bylaws, additional rule books and everything? And another question, you also mentioned during the answer for the previous question that you sent certain financial reports to the parliament, right? And do you send only the budget execution reports, or you send them the whole set of the financial report? And at your opinion, do you think that they have, let's say, enough capacity for being able to read, to understand, or to discuss these financial reports? And do you have additional, let's say, struggles in explaining them, the differences between budget execution reports and the financial reports?
That's
Thank
also,
you.
Yeah, please.
Thank you. Maybe.
My question as well.
Too many questions, sorry.
So I would like to extend it a little bit and ask all our PULSAR presenters, Oscar, Dritan and Ludmila, also share their experience in terms of what is the role of Supreme Audit institutions in their countries in terms of auditing the financial budgeting reporting, if there is any annual report that's sent to the Supreme Audit institution, if it's later approved by the legislative or not. And also very important question, if the Supreme Audit institution is participating in the IPSAS implementation process. And at least at the capacity building level, because the auditors who is going to audit the new accounts prepared based on the IPSAS should be at least familiar with this new accounting framework. Thank you.
Should I start? Yeah. Thank you for the questions, set of questions. All of them are very relevant, not only for us, but I'm sure for other countries as well. So let me start with the relationship with the State Audit Office and move to Parliament. So State Audit Office has been involved in the process since the very beginning. So back more than 1 decade ago, when the reform was initiated, they've been part of the discussions all the time. Also, they have their own capacity building activities as well, and they can also participate in our capacity building activities too. And in terms of submission, yes, we are submitting. You got the point rightly from my presentation. It's already more than 3 or 4 years we are doing it, submission of the financial statements to the State Audit Office, but at the moment they are not auditing it, they just get it, they are not auditing it. The position is that until the reform is finalized, so until we reach the final moment when we say that all relevant standards have been adopted, everything works perfectly, only after that they are moving to auditing part. But again, in order to keep them, keep the process alive, keep them on the board, we submit those financial statements to them, and not only to them, but also we are uploading it on the website. We're submitting them officially, and on top of that, we are also making it available to all interested parties as well. As for the Parliament, we are not submitting financial statements to them because, again, it is already available on the web page for any interested party. So the primary accent and focus in terms of the relationship with the Parliament is budget execution reporting package, which includes mainly the central budget execution details. And you referred absolutely correctly about the understanding of the financial data. So once we start providing them the financial statements as well, whether there will be enough, understanding of those data and enough usage, that's questionable at the moment, definitely. In our country as well as I'm sure in almost all the countries around, and that's why we need further capacity building. But there are already signs of using those data in better budget planning, and once these kind of signs expand further, better planning, better allocation of resources, better management of receivables like tax receivables and so on, the more interest will be attracted towards the financial statements, including from the end of the Parliament. That's what we believe, and there are already signs of that. Yes, I think that was about the Parliament and State Audit Office interaction with them. Maybe other countries also want to.
Yeah, I mean, in the case of Albania, I mean, I think we kind of have a similar process. And as I explained briefly during my presentation, we do submit in the Parliament consolidated budget reports. We do not submit financial statements. That's why the financial statements are not audited by the Supreme institutions, but the consolidated, but the budget execution reports are audited each year by the Supreme Audit Institution. So before sending these documents to the Parliament, but as I mentioned, we are currently under reform to move to accrual accounting, and the aim is to prepare financial statements based on IPSAS standards, and definitely then when we reach that stage, definitely the financial statements would be needed to be audited by the Supreme Institution. And in this process, we are including also the Supreme Institution currently in the reform process. They are informed, they are part, as Dimitri also mentioned, we have involved them in the training capacity building activities that we are currently undertaking, and we are We are working closely with them to sharing the stages of the implementation process that we are undertaking in order to involve them and make them ready as well to have an appropriate audit of the accrual-based financial statements when they will be prepared in the near future. Thank you.
Ludmila, let's give a few seconds to put the translation for those who need the translation from Russian.
We have budget and financial reporting in Ukraine. We consolidate both budget reporting and financial reporting every quarter and at the end of the year. To the Parliament, we submit financial reporting, but you have asked that question, how budget reporting and financial reporting might not be the same. You need to look at the forms of budget and financial reporting that are applied in every nation. In Ukraine, indicators of budget reporting and financial reporting are different sets of indicators. And what is budget reporting is one of the chapters in cash flow of financial reporting and results of financial activity of fund distributor. So it's transferred automatically. So we see how the cash flows. In the Parliament, we have budget committee, reviews financial reporting before submitting a report to the Parliament. We, of course, do the audited by the accounting chamber. All the financial reporting is reviewed by accounting chamber, then it's submitted to the Parliament. When it's approved by the budget committee of the Parliament, then it's officially published. And then the law requires from all distributors of public funds to publish their reports at their websites. The training, the specialists from the Chamber of Audit have gone through the training, and we have the program of training for all of the workers, and all the leaders of each department will go through the special training. Considering our situation, that would be online training based on University of the Ministry of Finance. Thank you.
Thank you very much, Ludmila, Dritan, David, Oscar, for joining us. Oscar, for waking you up so early today and for being with us. You are welcome to stay for the rest of the sessions. Fortunately, we can't invite you to the lunch. And right now it's a lunchtime. Sorry for this 15 minutes delay. So please enjoy the lunch, and let's be back in 1 hour, 2:15, please. Thank you.
Dear colleagues, we are moving to the most exciting part of today's event. You know why it's most exciting? Because after lunch part should always be most exciting, not to let people go asleep. So, but before we start, let me add a little bit energy to this discussion, starting with very brief questions. It's going to be poll questions again. We did such an exercise already the day before yesterday, so we will repeat it once again, but questions will be different, of course. So you have QR codes on your table. You should have, at least I see at the table, which is the closest to me, I see that there are QR codes available. Kindly take your phones and scan. Yeah. If it check if it works. Perfect. So let us move to the first question to understand better who is still with us, who our audience is. Can we see the first question? Yeah, the best, of course, for the most exciting session. Yeah. Cornelia, can we see the first question? Yeah, okay. I see that many people have already started answering questions. Great. So the first question is, what is the role of the organization that you represent in the account? What is the role of organization? Next question. Okay, we have 36% from mostly from the Ministry of Finance and 14% from other regulators and professional accountancy organizations, and 26% of academia and 9% of others. So we still have a good presentations from the regulators, and I hope that PAO will join us to in the course of the session, and academia number is increasing. Did everyone take a chance to answer the question? Perfect, let us move to the next one. Cornelia, the second question. What country do you represent? Here you should type the country you represent. Canada is the first one. Okay, Georgia, Sweden, yeah. But you're Italian. But you represent Sweden, okay. Montenegro, Armenia, Kosovo, great. Great. And the bigger letter of the name is the more representative we have from this country. So far, Azerbaijan is leading. And Armenia, and Moldova, Albania, Georgia. Ukrainian table, you are not answering very fast, I see. You should be faster. No Wi-Fi. Sure, answer for Ukraine. There are many of them, look. Good. Did everyone take your chance to answer? Okay, so Kosovo now is the biggest delegation. Oh, now I see Ukraine, finally. You connected, right? Okay. Good. Okay. So let us move to the next question. Thank you very much. And the next question is, did you attend online webinar on international education standards, which was conducted on November 3rd and 4th? So many of you know that we had a previous event almost a month ago, which was online event devoted to discussion of changes, updates to the international education standards. And it was conducted for educational community of practices of both our regional programs, STAREP and PULSAR. And I hope that many of you who attended that event from these communities of practice are present here. Okay. So most of audience present today did not attend that event, but we will, the first presentation today will be devoted to main takeaways from those events, and John will speak about them. So I hope that it will be of interest for you. Okay, thank you very much. Let us move to the next question. Okay. This is the first time we're using this app, so now you may see that this is true. Let us move to the next. Are you aware of the changes introduced to the international education standards? Well, so only 27% so far, okay, 35, are aware of the changes that were introduced to the international education standards, but we will talk more about them today. Also, John and Sarah will talk about these changes and will focus on them. So for those of you who are not aware of the changes or maybe even of the standards, will take their chance to get familiar with them. Okay, and let us move to the next question. Which organization you represent started implementing changes introduced to the international education standards? No, 100%. Someone is too fast. Okay. Okay, so only 17%, okay, 2024, have started implementing changes which were introduced to the international education standards. So it means that there is a lot of things to talk today, and this topic is actually should be of interest for you because we see it by the numbers, by results on this slide. And let us move to the last one for now. Okay, which IFAC membership? No, it's already, yeah, it's too fast. Deactivate it, please, Cornelia. It's prediction a little bit. Okay, so now let me move to the first speaker, John Hooper. I think that most of you know him and he doesn't need to be introduced. Today, John is WorldBank consultant. At this event, he's a WorldBank consultant. But most of you definitely know him from his previous work, and he supported and helped to implement accounting and audit reform in many countries in the region and beyond it. And so, John, over to you. Thank you.
Hi, good afternoon, everybody. I'm trying to wake you all up at the back there, so I'm going to talk really loudly. I don't like what we just did, because this gives everybody the opportunity to pick up their phone and stare at it. And it's great because I'm seeing quite a lot of the top of your heads here, you know, it's like this. I'd rather talk to your faces, so kindly either put your phone down or don't check your email for at least while I'm speaking. When those guys speak, you can get back to it, but while I'm speaking, please keep your phones away. I'll try and keep it to the point quickly and not go on for a long time, but it seems like some of what I'll say may be new to you. I'm really excited to be here. Natalia introduced me a little bit. Some of you will know me already. I've had the privilege of working in this area for 25 years. I qualified as an accountant in the last century. Right? So I qualified admittedly in 1999, but I've been doing this. So my initial professional development was in the previous century, which emphasizes how you have to keep up, you know? And so I'm having to try and keep up for the last 25 years with what's been going on in the world of accountancy. So we're going to focus on changes to the education standards, but what that actually means is not the standards, it's the education. It's what accountants are being taught. And of course, they're being taught as initial development, the students, the people just coming into the profession, but every one of us here has to keep learning as well. So continuous professional development, or just keeping up to date. So this is about keeping up to date. Our friends at IFAC, and Sarah represents IFAC, you'll hear from them later, they put a lot of thought into what accountants should be keeping up to date with. That's basically what the Education Standards Board's always done. It's putting all this thought in so you don't have to. Same as the auditing standards put a lot of thought into how to do an audit so you don't have to invent the wheel every time. And the IFRS puts a lot of thought into how to categorize and how to put on paper what's happening in the real world. This here is IESs are just somebody's attempt, and I used to be on the advisory group to the board. It's people's attempts to write down in a fairly organized way what the world of accountants think accountants should be learning. Okay? So there was a big event, 2-day event, and we're going to give you a really 15-minute summary of the 2-day event, which, believe me, is better than sitting through the videos of the 2-day event. You can go and do that if you want. It's available somewhere, but I'm going to give you the best bits, the highlights, like watching the football goals from the World Cup. You know, there's no point watching all 90 minutes. Just pick it up on the highlights, 3 minutes. So I'm going to give you the sort of the football highlights equivalent of this thing. But let me just give you immediately an overview. It's all about the changes, the recent changes to IESs. Now, you know that standards keep moving. So it's like, obviously, it's like firing an arrow into a moving target. You're very lucky if you can hit the target. It really helps if the target stops every now and then so you can fire the arrow. They made a load of changes to these education standards. We'll talk about what they are. They hopefully are not going to make any more changes for a while so that we can all get up to where they are. And to summarize it, it shouldn't be a surprise to you that they made the changes in the area of information communication technology. because that's moving the whole time. So they updated them for a bigger emphasis on technology, data. Heard a lot about it yesterday in the ministerial conference. So they updated it for that because it's constantly moving. And the other thing they brought in mostly was updated for a bigger emphasis on professional skepticism. And every time there's a scandal all around the world, whether it's public sector or private sector, every time there's a scandal or something goes wrong, accountants are told you've got to be more skeptical. So trying to teach accountants to be more skeptical is a big challenge. So those are the two real challenges in educating accountants at the moment, or emphasized areas, and that's what the changes to these things try to address. Okay, that's a summary. So let's go on. Do I get to click this? Well, I'm going to be controversial here, and I'm not going to read out every word on that slide. That's what people generally do. They put the facts on, then they read them, and it's like, well, that's, I'm going to give you sort of the highlights. So like I've just said, the changes are in the public interest. All these standards are done in the public interest. IFAC does work in the public interest, not just in the interest of accountants. And they're trying to meet the needs of stakeholders who accountants are serving by emphasizing those two areas. ICT, information communications and technology, and professional skepticism. There were 8 education standards. They updated 4 of them, 2, 3, 4, and 8. If you're interested in all that, go online, find the standards, have a look at them. They're in all sorts of different areas. Why did they do it? Well, one of the presenters on the 2-day event was from IFAC, the chairman of what was the standards board, and she emphasized very clearly that 69% of employees, I like this, was a survey I think in the US, 69% of employers said they needed their accountants to have strong data science and analytical skills. But only 23% of you, if you're educators or the educators you rely on, only 29% said they're actually delivering these people with strong data skills. So there's a gap there, quite a big yawning gap, and that's what the changes are trying to address. The environment changes all the time. And as I say, the professional skepticism is a constant attack on accountants. They're constantly saying, you're not really applying any common sense, you're not thinking, you're just like a computer. You're not being skeptical about what you see. Try and be skeptical. Unless it's dangerous to be skeptical, in which case just get your head down. So there was a discussion, there were people presenting who have experience on implementing the changes. The education lead from IFAC has talked to a lot of her members and said, if you're the professional organization, what's difficult about changing standards, changing your education to meet the changes in the standards? And somebody from ACCA was presenting on that, and somebody from the Scottish Institute for Chartered Accountants was presenting on that. So they highlighted that there's a financial impact. It costs money to implement any changes, to redo your syllabuses and stuff costs money. That's the problem. Second one was addressing the scale. Are they big changes? I don't think they're that big changes, but they might need big changes. Depends on what you're going to think. And then COVID gets in the way, like everything in the last few years. The changes were published, I think, in 2019, 2020, but COVID got in the way of implementation, which is why a lot of people are just getting round to proper implementation now. What did they need to do? Update the curricula for these emphases, change some exams, do the training for lecturers or teachers, if a professional organization, and then inform or train the people who are in the workplace where the accountants are working that this is going on. That auditors and accountants should be able to have better skills in IT and have more skepticism. The people who spoke in the conference, and maybe some of the questions that came in and such like, they said that aligning the curriculum was the biggest problem. Okay? Because what was changed, the education standard sets out learning outcomes. There's big change from just setting out the list of topics you're going to talk about. It goes to learning outcomes. And these changes added some more learning outcomes or more specific learning outcomes in those two areas of ICT and professional skepticism. And so if you're going to apply these changes, you have to make amendments to your curriculum, and the learning outcomes part of that. IFAC, there was a presentation from IFAC, and they noted that, of course, if you change the standards and you're being asked, do you comply with those standards as a professional organization, and then somebody moves the standards, well, then you don't comply with the latest version until you've changed to comply with them. So actually you might have had full compliance before they changed the standards, but until you keep up with the changes, you're going to move to partial compliance until you catch up. So that was noted. Somebody said, of course, you change the education standards, but I'm the PAO and the universities teach this bit. So, we've got to go and persuade or ask the universities to change, to incorporate new learning outcomes in the area of professional skepticism. It's going to take time. It's not our control. We control the bits, we'll change what we control, but it's more difficult to change the universities. IFAC are going to look into the implementation of these changes. It's the standard thing. Post-implementation review to see how they've been implemented, what were the barriers, anything need changing. So that was the second part of the workshop. Right, the third part, there was in the 4 sections of this workshop. The third part of the workshop addressed the change within IFAC. They had a standards board. So there was, just like in the ethics board and the IAASB auditing standards board, there's been an education standards board. And they decided that wasn't necessarily the right model. So after a lot of consultation, IFAC have moved away from just having a standards board to having a new education model. And the IESs, the education standards, are now under IFAC rather than sort of being under this completely independent standards board, which wasn't really that very independent. And they've got a model, and within the model is a panel, which has 22 members and is a different thing. So this new model is IFAC's way of addressing education going forward. This is a good one. It aims to be more agile. Doesn't everybody aim to be more agile these days, honestly? Less sort of standard and agile. I'm not entirely sure what agile means in this way. Agile is you're standing on something, or you can bend well, or it's one of those strange English words that gets used out of context, but still. One thing that is interesting though, the new education model does not seek, or seeks not for the response to any issue to be do a new standard. So there isn't an IES 9 on professional skepticism. There isn't a new IES on ICT. It says, look, whatever the issues are in educating accountants, let's come up with a slightly better response than just a standard, which is why they've taken the standard board and made it sort of part of the bigger model. They're trying really hard to engage with stakeholders. One thing I found was interesting in one of the presentations said that IFAC has access to the education directors in 160 PAOs and the staff. So that's a lot of people they can touch on, they can get a survey from or find out from. They have the form of firms, so they have access to 60 firms who are the users of the accounting education, so they can get a lot of input. But in return to getting input and getting these information, they want those people to advocate for these changes. Like I said earlier, if there's universities in some countries, the universities does almost all the teaching. So IFAC people should be the advocates to get those universities to teach the right thing. So that's that. What is this? So there is a panel. It's got 22 members from a whole diverse stuff, different languages represented, different people represented. It's got 5 observers. They get split into subcommittees, all panels do. And when I say they're not considering changing, they are thinking as a model that there might need to be some changes to the education standard on assessments, on exams. So there might need to be some changes there. They're also looking at the barriers, like I said earlier, the barriers to implementation. What is stopping people from implementing these standards properly? And then we had the chat from Germany. There's a guy on the education panel from Germany, and it's always fascinating because a lot of this stuff from IFAC it comes after the sort of Anglo-Saxon model of accounting education. So it's always good to get a view from Francophile or French or German or other countries. So it was great to get an input from the German member of the panel. And he said that the IESs are the basis of the German audit qualification, but they seem to have a bit of the old-fashioned idea of a list of subjects, and then they incorporate the IESs as well, which they kind of have to because of the European Union directive, which just lists subjects you have to teach. And he raised the same point. It's quite hard to control the universities, to control what they're teaching, but they try. They do their best. And then we broke the shackles. We got out of this very narrow area about thinking about education standards, which are fascinating. And I could talk for at least the rest of tomorrow about education standards if you're sitting comfortably, get a coffee. But no, we looked at some of the more exciting areas, and we had a presentation from the chat from the US CPA. And again, it's always interesting to hear from the US rather than just the standard Often you get to hear from the chartered accountancy bodies from England, Australia, Canada, all these places, but the US does it slightly differently. They have a different education model where most of it is delegated to universities and they just have 4 exams at the end. So that's a different model. They're thinking of changing their model. They're going to have the core of audit, accountancy, and tax. At the moment in the US, you just take the same 4 papers, everybody does. But now they're thinking of radically introducing options. You do the first 3 basic papers, and then you get to choose between a tax paper, a business analysis paper, and an information systems and control paper. But they were very clear that actually data analysis and technology is not just in that 3rd option, it's in all the papers. But you could, so yeah, the 3rd one is the 3rd one is more focused on the information systems and controls, but actually data analysis and technology is all the papers in audit, accounting, tax, and the option papers. The guy there said that it's really difficult to teach data analysis. Well, it is, because the teacher's got to keep up to date, as well as then passing that knowledge on to the students. I always find there's a big problem. If you're a 40 or 50-year-old teacher like myself, I don't teach that often, and I'm going to teach young people about data analysis, and they're going to look at me and go, you can't even use your iPhone properly. You know? You're having trouble pressing the button on the slide, for goodness sake. How are you teaching me about IT? I can run rings around you. But still, that's a challenge. Teachers have got to teach stuff that they may not be the best at. Well, you've got to keep up to date. They talked about an alphabet soup. I haven't heard that expression for a while, but that was good. We accountants like alphabet soup. Just aside, I mean, on ESG, on sustainability reporting, you can see EFRAG, well, for a start, it's EFRAG, E-F-R-A-G, and ISSB. We're inventing new alphabet soup. We're inventing new acronyms. Whole world of new acronyms coming in. So that you can just see where that one's going, can't you, in the whole sustainability stuff. Double materiality. You know, you've lost people outside the door. The minute you talk about double materiality, a person in the street doesn't know what the hell you're talking about. And we have a whole new profession that we can protect ourselves with and earn lots of money from. He talked about that. Here's the next interesting statistic. 91% of companies report on sustainability, but only 51% of them have any assurance on it. Which to my mind suggests that 40% of them are greenwashing, or can be greenwashing, because nobody's checking what they're saying. And if you are a polluting company, are you going to voluntarily tell the world, hey, I pollute? No, you're not, are you? So those 40% who have no assurance could be completely making it up. Different approaches around the world. The US have decided they want to try and get sustainability and put it in all their papers. And the UK body which I worked for, Institute of Chartered Accountants, England and Wales, again, the same thing. They're going to integrate sustainability into each of the papers. Whereas the Chartered Accountancy of Australia and New Zealand are having a separate paper, elective. Although I'm sure they will be also incorporating ESG into each of their papers, but they're having a whole new extra paper, which the US are not doing. That was an interesting one. We had a presentation from a lady on the IFAC, developing professional accountancy organization, developing an advisory group. Also came from Mexico. She works for the Institute in Mexico. And she was emphasizing the same point. Data is big, the profession can't wait. And she had a whole load of different models, lots of accounting models. Somebody's done a lot of analysis about what an accountant should be, how the accountant of the future is going to look like, what you need to do. So she presented lots of graphical models, which completely lost me. I'll show you some of those in a minute. And then ACCA came along, and they gave you a load of models as well. But this is an interesting one. They said, how they worked this out, I don't know. It's one of those magnificent heroic assumptions. 50% of the global GDP depends on nature, which was one heck of a statement. I don't quite know how they came up with that. I don't know whether they think the other 50% is completely unnatural, in which case was it alien? Where does it come from? But still, we all depend on nature in some ways. But they reckon 50% directly comes from nature. So sustainability is clearly hugely important. They reckon there are 7 core priorities of accountants. Where do they come with these numbers? 7? Not 6, not 8. There are 7. But one of them they reckoned it was sustainability. Now, what I saw from reviewing all the presentations was that McKinsey have been very busy for accountancy. And if not McKinsey, then probably Bain or BCG, because there are some magnificent models coming out. I don't expect you to see this, but Look, you've got an anticipatory leader model for accountants. Did you know you had to be anticipatory leaders? I didn't look in detail as to what that actually is, but there's a future-ready T-shaped professional. What, stood like that? I could be there you are, I'm a T-shaped professional, if I'm a professional. But no, you've got boundary crossing competencies and wide competencies and deep competencies. These models are magnificent, they go on. There's this one about moving to anticipatory, which is kind of weird because if you're anticipating something, you're sitting and waiting, you're not moving, but that's okay, we'll go with that. There's a pyramid there of the cognitive domain. Now I speak English, I'm English, but I have no idea what that means. The cognitive domain, anybody? No, I didn't, yeah. And there's a hard trend to exponential technology. There's lots of good buzzwords here. Somebody's getting paid money, aren't they, for this? There's another one that you've got, I don't know. That was I don't know where these came from. They've all got copyright on them, but I'm just highlighting there's some great models out there. ESG as part of the work finance professionals. So there's a circle there. We like circles. Circles are great because you get paid all the way around. And every time you go past go, you get more money and you get paid again. So that's a good one. We like that one. I don't know what's going on there. I think those are the 7 or something. Well, whatever. Accountants got to do all these things. So somebody believes. But there was one that stood out, and I have to give credit to this. There was one model that was just the best out there. This is the new IFAC accountancy education model. You ready for this, Sarah? There we go. And if you can understand that, you're beating me. Magnificent. We're all on a tree. So maybe I'm being a bit lighthearted. I think going back to summarize, education is moving all the time. And they've just included ICT, and they've included professional skepticism. And it's obvious to me that the next changes will be to include sustainability. So just watch, because that's coming. Thank you, indeed. Thank you.
Thank you very much, John. I think that we will, in case someone has questions, we will leave it for a little bit later because we have 2 more interesting speakers. And let me invite Sara Gagnon as the next speaker. And Sara is Relationship Senior Manager of International Federation of Accountants. And I encourage all PAOs present here to talk to Sara and to use this chance to get familiar to her because she is a key, she's a key person in IFAC responsible for cooperation with PAOs in this region. So Sara, over to you. Thank you.
Thank you so much. And I'm really delighted to be able to be here and meet with you all in person. To shift gears a little bit, I'm going to be sharing on the regional adoption and implementation of the international education standards by sharing perspectives and data from our IFAC member compliance program. As Natalia mentioned, my name is Sarah. I am one of the senior managers at IFAC, where for the past year, I've been able to get to know and work with several professional accountancy organizations from the Central, Southern, and Eastern European jurisdictions. Also at IFAC, I spearhead our member compliance program, and I drive a lot of the adoption reporting on the global status of adoption of accountancy standards. Just to give a quick overview, like I mentioned, we'll be looking at the regional level of IES adoption. But before that, I want to preface that and give context to that by explaining a little bit about IFAC's membership compliance program, because it is how we get all of our data and both quantitative and qualitative. So trying to do more storytelling that's been talked about here as well. I'll also share of course, the role of professional accountancy organizations around the adoption of the IES and how that enables successes and or challenges, and then try to conclude with some resources for your reference. To start, just in case anyone is unfamiliar with IFAC, we were established in 1977. We have grown to have over 180 membership organizations representing 130 jurisdictions worldwide. And among those PAOs, they represent over 3 million professional accountants that are working in the public and private sector. At IFAC, we have a very strong transparency and public interest focus, and we try to use our comparative advantages of being a global convener, being a knowledge gateway and source of information, and ideally an influential voice for the accountancy profession. As a global organization, we have a global vision and mission, and very clearly in our mission statement, we state that, when we recognize that we can't achieve what we want to achieve without the support and collaboration with our member organizations and our wider stakeholder network. We have 3 key strategic objectives, and the third one is focused on promoting the development, adoption, and implementation of high-quality international standards, which is, of course, what I'll be focusing on today. At IFAC, we very much recognize that adopting and implementing accountancy standards is a lot of hard work. It takes a lot of advocacy, public education, outreach, and coalition building with a number of stakeholders. And so in each jurisdiction, there is an ecosystem of that. While at IFAC, there is also an ecosystem in how we approach our work around adoption and implementation of the accountancy standards. There are some components here that you might be familiar with, especially if you're a professional accountancy organization. You might be familiar with our membership criteria, our membership requirements, our action plans and assessment profiles, as well as various surveys that we send out. We also place a high value and priority on our intellectual property process. I know translations are very important, especially for this region. And so through our intellectual property team, we make sure that intellectual property remains secure and is always being used for the greater good and in the public interest. And all of this work also feeds into other areas such as advocacy, whereby through our several advisory groups and committees, we can provide input into the international standard setting boards and processes. We also, actively engage with the boards on post-implementation reviews and leveraging our membership network to get them the information that they need, as well as, engagements and outreach. This can also feed into some of our capacity building programs, to understand and support the capacity building and institutional strengthening of our membership organizations. That's primarily done through our Mosaic agreement, which we're very proud and delighted that the WorldBank is a part of that and helps support, projects and engagements with professional accountancy organizations worldwide. So, like I mentioned, only through our coordination and collaboration across all of these various areas and with all of our different stakeholders can we really achieve our mission and one of our objectives to adopt and implement high-quality accountancy standards. So, of course, because we are a membership network of professional accountancy organizations, we very strongly believe that capable PAOs can produce competent, credible accountants, advance international standards adoption, and are really, best placed to serve the public interest. Competent, credible professional accountants are then better equipped to produce high-quality financial and increasingly non-financial information that is then supporting and sometimes really driving economic growth, economic development, and hopefully reducing poverty, increasing prosperity. IFAC membership is, a globally recognized hallmark of being a high-quality PAO, and being a member of IFAC makes it clear to both public and private sector organizations in your jurisdiction, regionally and globally, that your PAO has credibility and capacity and relevance. So almost 20 years ago, IFAC's membership compliance program was launched in order to spur accountancy organizations to work with their members, regulators, other stakeholders to take very specific actions that would in turn strengthen the global accountancy profession. And through the program, IFAC members and associate organizations, commit to adopting and supporting implementation of international audit standards, education, ethics, financial reporting, and public sector accounting standards. They're also required to operate or support the operation of strong quality assurance and then enforcement mechanisms as well, which also helps to build public confidence in trust. Our requirements are codified in what are known as the Statements of Membership Obligations, which are a framework of 7 globally applicable requirements. And these have become universally recognized benchmarks for PAOs that are working to serve the public interest and meet market demands. These membership requirements are frequently cited from WorldBank ROSC reports, for example, and we're also very proud that the member compliance program was highlighted by the OECD's Partnership of International Organizations for Effective Rulemaking as an example of an implementation best practice. Participation in this membership compliance program is mandatory when you join IFAC, which I think in part is why IFAC membership can resound so significantly worldwide. It involves a constant interaction between the PAO and IFAC staff to drive understanding and drive changes at a national level. And the program reflects that IFAC vision and belief of the impact that capable PAOs can have. Our compliance program is not just intended to be words without action, though. We really do try to drive progress and results. And that comes through the submission of regular action plans from member organizations where they illustrate and demonstrate how they are fulfilling membership requirements, in part around adoption and implementation support for accountancy standards. IFAC's assessment has a plan, do, act, and review quality management cycle where we do rate member organizations on how they're fulfilling the membership requirements. And so that allows us to help direct member organizations to resources if there are areas with lower ratings. And it also provides a very honest basis for conversations where some necessary next steps or actions need to be taken. So aside from myself, there are 6 other regional managers that carry out this membership engagement and work to understand our members' strategic objectives, their priorities and challenges, and how they're advancing with adoption and implementation of international standards. So before my next slide, there was a poll question.
So
okay.
Could you please take your phones again? Yeah, and most of you have already responded.
Okay.
The question is, which IFAC membership requirement is specifically on the international education standards?
Yeah.
Would you like to comment?
Oh, okay. I'll wait a little bit as there's still some.
Keep your phones in front of you because we have many question-answer sessions to keep you alive after lunch, so do not put it far away. Okay.
Okay, so yes, I see some answers are still coming in, but overall it seems that we have a very knowledgeable audience here who knows that SMO2, I can't change the slide yet. There we go. That SMO2 is specifically on international education standards. As you can see on the slide, there are 7 membership requirements that represent best practices that are relevant for the accountancy profession. And we require and expect all IFAC members to report on their activities within each of these membership obligations. The SMOs not only represent those requirements and obligations, but they are there to represent the core competencies of a capable and successful PAO that can appropriately serve and function in the public interest. We have SMO2 as sort of that initial layer of this house, because the accountancy education is truly the foundation of the profession, and it's why alignment with the IES is so important. A house is only as strong as the foundation that it's built upon, and so the profession's competencies, its credibility, and trust is therefore in part built upon having strong national education systems. There was a lot of mention yesterday around financial reporting being an engine of growth, some analogies to cars, and that made me think about what that means for accountancy education. And so I think that accountancy education that aligns with the international education standards and best practice could be like a car battery. If your car battery dies, you're still not going anywhere. That battery is what's powering the engine. And so I think the accountancy education is really what's powering the ability to have good financial reporting. Starting to get more into the data and details here, I've presented what the global adoption status of the international education standards are, as well as adoption of the standards among Central, Eastern, and Western Balkan jurisdictions. Our methodology for assessing our international standards has been, determined in collaboration with each of the relevant independent standard setting boards, as well as stakeholders like the World Bank. And we endeavor to be relevant to each of those 7 areas while having some level of global consistency. And because I mentioned IFAC works in the public interest and transparency, all of our assessments of IFAC member jurisdictions are available online, as well as our methodologies. So as at the end of 2021, this was the global status of adoption of international education standards, where we can see that about 20% of our member jurisdictions have fully aligned and adopted with the latest IES. But a very large percentage, 77, are still fall into that partial adoption category where they haven't fully yet aligned and adopted with international education standards. At the regional level, it's a fairly similar rate of adoption to the global level adoption, with many jurisdictions being categorized as partially adopted all of the requirements. We do our categorizations based on information submitted, as well as additional desk research and stakeholder consultation. And I want to be clear that we assess adoption at a jurisdiction level, as opposed to just what a PAO is doing at an organizational level, because we ultimately want to drive changes and behavior at the national level. If an IFAC member might require its membership to complete CPD, but membership is voluntary, that might mean there are still other regulated professional accountants that aren't required to fulfill CPD. In that case, the IFAC member organization would be responsible for promoting the IES, in this case IES 7, to the relevant national authority or standard setter to ensure that all professional accountants are subject to continuous and lifelong learning and development. Because IFAC's membership and its membership requirements apply to PAOs, it's also important for us to understand the level of legal authority and context that PAOs are operating in their respective jurisdictions, and therefore what actions they might take to fulfill SMO2, the membership requirement around adoption and implementation of IES. We assess whether PAOs have the the direct sole legal authority to adopt education standards and decide what those will be in the jurisdiction. If they have shared responsibility, which means they need to collaborate with other national authorities, or if they actually have no authority to adopt standards and can only advocate or provide implementation support once standards are passed into law. Through the member compliance program data, once we started collecting this and analyzing it, we've been raising awareness around a somewhat interesting result that actually many professional accountancy organizations do not have the direct legal authority to adopt education standards in their jurisdiction. Globally, 74% have a shared responsibility where they need to collaborate, advocate, and engage with other relevant stakeholders. And in this region in particular, that goes even higher to 94%. So there's a lot of collaboration that has to be done. And here's another model or web for you, John. There can be a wide range of stakeholders in each jurisdiction. And this network is likely to continue evolving as a result of changes in technology and just the general world of work today. And so to progress the adoption of IES at a local level, PAOs are engaging with all of these stakeholders and others, and each of them has their own set of priorities, strategic objectives, and processes. So this can present a bit of a complex operating environment and make full adoption of the international education standards a somewhat challenging process. But all PAOs play a really crucial role as that bridge, as that center of excellence, and as a key liaison with all of these relevant stakeholders to advocate for adoption of best practices that will ultimately be a source of strength and competitiveness for their national professionals. I think yes, there's a poll before my next slide. So before I get into my slide on some of the challenges we're seeing in adoption of education standards, just wanted to get a sense from the audience of what you might consider what the biggest challenges in adoption of these standards from your jurisdiction. There are none. Okay, great. So I think if we can go back to the presentation, I think it was quite interesting that the most cited reason was a lack of understanding around the value of the education standards. And I think that, again, speaks to some of the challenges that we hear and see from the member compliance program, is that there can be, sometimes a lack of interest, a lack of coordination and collaboration among stakeholders on this important topic. These were some of the other challenges cited both in the poll, but it's also what we're hearing from our membership program. And the ones on the slide here represent somewhat in particular some of the challenges from this region. So we see that university curricula doesn't necessarily fully meet the IES. There's been difficulty moving to a competency-based approach. And some information about IES alignment is just not available. So a diagnostic or assessment hasn't been performed, in which case, we're not going to go ahead and say a jurisdiction is adopted without having some more concrete information. And then I think quite notable for this region is that there is a higher regulation of professional accountants, not just auditors, which I think is quite inclusive of the full spectrum of the accountancy profession. But what happens, though, is that those individuals would be considered regulated professional accountants. And if accountancy education for them is not yet aligned with the international education standards fully, it will impact the rating and adoption status of the jurisdiction. But again, because we strive to make changes at a national level, we think this represents still a good opportunity to drive behaviors and raise awareness about the importance of education standards that meet global best practices for all professionals to provide high quality services. I think I've got a poll before the next slide as well. So So just digging into one of the challenges a little bit more is that, is there a competency framework that's used for accountancy professionals in your jurisdiction? So quite positive to see that there's still 80% saying yes here. And I think if we go back to the presentation, here we go. Trying to dig a little bit deeper into each of the 8 education standards. These are some of the most frequently cited challenges for the region in terms of full adoption of the international education standards. As John mentioned and recapped earlier, in 2015, there were major revisions to the education standards that shifted how the standards might be adopted and incorporated at a national level. They became more principles-based and output-focused rather than just prescriptive. So that meant national standard setters really had to determine what makes sense for their local context, and not just saying what a standard is and putting that into local law or legislation. We see this affects full adoption of IES 5 and IES 6, which are primarily centered around having a competency framework. And so authorities need to identify those relevant competencies with proficiency levels and learning outcomes, again, for their context. The changes were both at initial and continuing professional development level. And we see in IES 7, there's a limited use of an output approach and still an input approach of maybe 120 hours over 3 years is still what is used to determine CPD obligations. The revisions also apply to candidates, so aspiring professional accountants. And you can see how that really affects university and PAO programming along the lines of IES 1 through 4 before they go to sit for a final exam. And as John mentioned, again, the standards were yet again revised to focus a lot on information communication technologies, applying to both current qualified professional accountants and aspiring. And yet again, that has an impact on IES 1 through 4, where there's more courses and curricula that are really needed around governance, IT, and risk management. Additionally, it can't be too understated the effect that COVID-19 had on accountancy education, especially around IES 6 and assessments. IES 6 outlines that assessments should be transparent and equitable and reliable, but the shift to online examinations certainly challenged that. Does every candidate sitting for an exam have equal access to reliable internet connections or equipment? It's a big question and evolving space around adoption of IES, and that's something that the panel is really looking at and considering. To wrap up my portion here, I just wanted to highlight some of the adoption and implementation support that's available from IFAC, as well as some of the support that was released from the Education Standards Board. Even though they were issued by the board, which has now transitioned to the panel, they're still very much relevant and applicable today. And these can be primarily found on IFAC's website, and there's an IFAC Accountancy Education e-tool to help stakeholders navigate the principles of the standards. We also have published a self-assessment checklist that is really targeted to professional accountancy organizations to complete and hopefully facilitate, high-level assessment and understanding of where your education standards are in comparison to what the international education standards state, and open up a dialogue with relevant stakeholders in your jurisdiction who are responsible for certain areas. Ideally, that can lead to and foster collaboration and creation of a roadmap or a plan to close the identified gaps. We have this self-assessment available in Arabic, Bosnian, French, Portuguese, Spanish, and Russian. Now, the text on this slide is small. It's not intended to really be able to be read entirely, but the main point is to also keep leveraging the regional and global networks that you're a part of, like this great event. Within IFAC's membership ourselves, we have a number of success stories from PAOs globally that have overcome challenges to their adoption of the international education standards, navigated through them to reach good collaborations and solutions. I've got some examples here. Hopefully, I think the slides will be circulated that you can reference to. And I've also included some screenshots of IFAC's Global Knowledge Gateway. And if you're unfamiliar with the Global Knowledge Gateway, it's really an excellent source of implementation support, resources, articles, and videos, where we at IFAC regularly share adoption and implementation success stories to demonstrate how PAOs are vital to adoption at the national level and keep up the momentum and encouragement for IFAC members to do so. The ones I've highlighted here are around accountancy education and ensuring that education standards, approaches, and schemes can meet the IES. So I think with that, that's the end. Thank you so much for your time, attention. I'm happy to answer any questions and follow up with more of the relevant links or resources.
Thank you very much, Sarah. So again, if you have questions, you will have a chance to ask them during our question and answer session after all speakers will present. And now it's my turn to demonstrate some results of the survey. Just a moment. Okay, yeah, that's okay. So. Okay. So some of you know that after the event that we conducted in November, we did a survey to understand what is the current status of international education standards implementation in the beneficiary countries. What main challenges you face whether in implementation of these standards, whether you know about the updates of the standards, whether you have already started implementing them, and again, what challenges do you face with them, and what is the current progress in all this process. So I will, some of you have already, many of you have answered the questions of that survey. We're not going to do it right now. I will just voice the results that we received and summarize them, and we will have a chance to discuss them later on. So I'm a master of questions today, you see. So the first two questions were devoted to respondents' profile, and you will see that many of respondents were regulators, universities, and some of them were PAOs and others. And here is the countries who took part in the survey. And the question was about awareness on the updates to the international education standards, and most of respondents responded that they are aware of the standards, but still you see that a big percentage of respondents responded that they are not aware of these changes. Hopefully after today's event, you will be, you get aware yourself with them. And the question was whether changes to learning outcomes relating to ICT have been started implemented. And some of you responded, about 30%, about 1/3 responded that yes, it started implementing, but most of you have not started your work on implementation of these changes. And same question was about learning outcomes relating to professional skepticism. A little bit more than a third responded that yes, and again, a big percentage of respondents have not started working on these changes yet. And the next question was area of qualification that have been changed as a result of the changes to the international education standards. And you may see that many respondents were focusing on syllabus and on training materials and courses and less on exams, which is understandable because this is one of the most difficult part. And also there is other answers, and we may have a chance to discuss which are those other areas during our Q&A session. And of course, with the help is needed within implementing these changes. Most of respondents do need further support on the changes implementations, but some do not need that support. What types of assistance will be helpful? And this question is actually one of the most important for us, because we need to understand what to focus on our further assistance including within PULSAR program going forward. So this is important for us to understand your needs and your priorities. And according to your answers, you are more interested in face-to-face meeting and simple examples of learning outcomes, in having webinars and similar events, and also in written guidance. And there is interesting question. It was whether other changes may be needed to the international education standards, and you may see that same percentage of respondents answered yes and no, and some are not sure, which is quite interesting as well. And the next question was whether you plan to amend your qualification and training to incorporate topics relating to sustainability reporting, which is also very interesting. You see that more than 90% respondents answered yes, they plan to implement, while as we know, in discussions with many of people, not everyone actually is planning or considering implementation of, so that's a very interesting answer as well, implementation of the sustainability reporting standards into their educational programs. And the next question was how these changes will be implemented. And you may see that most respondents answered that by adding content to existing papers, or by adding new subjects, exams, etc., or both additional contacts and new subjects and exams. And the next group of questions was relating to the current status of the international education standards implementation in relevant countries at organizational level, at the first level, or IPD, initial professional development, or continuous professional development, and in countrywide. So as you may see, most of respondents answered that at the organizational level, these standards are partially implemented. However, some of them consider about 25, about quarter responded that the standards are fully implemented. And at IPD level, in respondents' country, again, the prevailing answer that the standards are being partially implemented. At CPD level, again, prevailing answers that it's being partially implemented. And in country level, this is very good sign to see that most of countries, most of respondents answered that there is support at the regulatory level of the standards implementation. So thank you very much to those who took part in this survey. And let me pass over to Elena Misita. Elena Misita is actually a PULSAR EduCoP resource team member. And we're thankful very much to you and to other resource team members for all your work, for your support in planning our PULSAR EduCoP activity. Elena is member of board of the PAO, Bosnia and Herzegovina, the abbreviation of which I will never pronounce actually, so, but she's also chair of IFAC PAO Development and Advisory Group. Elena, over to you.
Me too. No, it's fine. Hello, everyone. Yes, when it comes to the name, I don't know, I was not involved with that, but many years ago, someone decided to translate, very strange, the name of our professional organization. And we have it for years, so it's even difficult for us sometimes to pronounce the acronym. So we are Professional Accountancy Organization from Federation of Bosnia and Herzegovina. So nice to see you all, so many familiar and so many friendly faces, and after 3 years, we are here all together. And I'm so happy that you answer. I saw the survey results just right now, and I'm so happy because ideally, I was trying today to convince you that you act fast and now, and to add the sustainability reporting, and generally sustainability is a part of your curriculums, the part of your IPD, CPD program, but already more than 80% of you say you are planning to do that. So you make my job easy, my presentation will be shorter. I don't need a lot of arguments now to tell you that, yeah, we need to take that action now. But I also see one thing in this survey, which I think is very important before I start with sharing a couple of recommendations with you. I would like to say that I realize in the survey that all of you say we will add content. We will add a content, no matter if that content we will add in IPD process or in one exam, or actually in one paper, or we will have additional exams. I just want to tell you one thing, what I learned as someone who is representing a small PO. We are so good in adding content, but we never think about that. It may be something our students don't need anymore. You know, we don't do the full assessment, but to add a content, we are the best in that. Okay, and then it takes, and everything becomes more and more difficult for people who wants to join to the profession. And as I join, I think we always, what we do, we add a content. I'm not sure if we take something out. And for quite some time, I'm a part of it. So please have in mind that when you're deciding how, and because this is the most difficult part in all this, when it comes to the education and sustainability, this will be more something which will take a lot of resources actually. And this will be most resource intensive part is that you build up your curriculums and everything what goes after that, you know, the assessment process and everything what is related, materials, trainings, and all of us are in this room are very much aware of that cycle. So please, I just needed to comment those results. Please think about that because it's becoming like really hard and we have more and more learning materials and more content. So sometimes we're good. I'm trying to convince people who actually made this decision in my country to think about that. Okay, I'm someone who make a pressure on them. Please, let's think through and maybe engage more to understand if this what is the part, you know, actually the path what our students needs to go through and everything what we expecting from them is something what they really need when they start doing this job, especially in year 2 or 3, 5, you know. So just a small comment. I'm just saying this is the mistake what we recognize. So I'm trying still to convince them. Maybe with you guys, I'll be more successful than I'm, you know, with the people who are making decision about our curriculum. So I was thinking what we are actually discussing today. The same thing what our group in IFAC is doing. So all of us are aware that, you know, it's changing landscape in accountancy education. All of us know that things are changing, but we are not so sure. I'm sharing this from the point of small professional accountancy organization, which doesn't have a lot of resources. We are not so sure what we need to do first, because so many things are changing in a time. You know, like 2 years ago, or maybe 1 year ago, I'm not sure, this last 3 years, I'm losing sense of time, but we were discussing like ICT skills. This was our focus. You know, my colleagues shared with you the great work which International Educational Panel did, and I strongly recommend to take a look to that document. And we were talking about ICT skills. Then we started to talk about sustainability reporting, you know, and we start separately to talk about that. And in one moment we realize it goes together. You know, it's integrated. So please also have that in mind. And I'm sure that I know that through this PULSAR community, we will have a great support in this path. So actually, what I should do, the green one, I guess. Okay. So I will try to share a couple of things with you today. So we are all aware that education is a multi-stakeholder multi-stakeholder activity. And in this room, this is actually, we have stakeholders, and all of them in some way are involved in an educational process. So please, before we start to try to talk about how much, we talk for 3 days about sustainability reporting, but when we share with you some of the recommendations, what we think are important to do around education, please have in mind that no matter where you come from, so where you are actually active right now, sustainability reporting is something very relevant for everyone. So this is, I know this is something, I feel that way, you know, it pushed me out of my comfort zone. Okay, let's be honest about this, okay? We are talking a lot about this, but I'm not sure sometimes on a conceptual level if we are talking about the same things. You know, all of us have our perception, if we have some experience with it or we don't have, we are looking for different, you know, talking to people, trying to learn more about this, but just, I would like to say, I'm aware that, you know, we are not in comfort zone, but just my suggestion is as soon as we expect, you know, accept it, that is something which will bring a lot of changes in our everyday work, no matter in which sector we actually are involved with. We're going to be much easier because we need to take this action now. Okay, how? So I think we need to start from ourselves and also from our organization, no matter if we're a professional accountancy organization or we work in a Ministry of Finance or regulator, like all of us, I think we need to start with ourselves also. Let's try to, you know, also educate ourselves more about this and build the capacity of our organization. As a PO, you need to provide a help to your members. So you need to start with yourself and some quick wins. What that means, basically, it means you try to find your partner. So some organization who has expertise in this area. And we are not so good in this because we love to be in our own world of accountancy. So we will need to partnering. Or maybe we can take some experience from some more developed POs or the global POs or some other organization who have a relevant expertise and go for, you know, start with their education. But I think it's very important that we don't make one mistake. What we did many times in this region, and I can say in the name of my PO, we are always waiting for some new standards. We have a draft, okay? We are aware what is coming. We are waiting for the standards. We are translating that standard. It takes a time, you know, it's a heavy process. And then what happens? Then we start to educate with education about that. We had enough time to prepare ourselves, but we do that like maybe a year before it comes to the, you know, becomes effective. So this time is a different story. It's not the same story. Now, we need, my suggestion to all of you is start with education, start with the trainings, find a partner who can help you with this. Don't wait for new standards. Don't wait for standards to finally come out. So we are aware, we know for drafts, we know what's going on. It's already some informations that are out, but things happening very quickly. So this is one of the recommendations what we have. Please, and just one more advice, what I think it's also important. It's very important that mostly what I realized that when it comes to, for example, my PO, we are thinking from perspective of students. You know, we're thinking from perspective of IPD. Don't forget your existing members. So you need to start to build for both of them. But first, I think we need to learn. And like I said, It's not my comfort zone, you know, it makes me nervous sometimes, but we have no choice. You know, I have a feeling that also it's like, I was for a while in denialing phase, you know, I was thinking, okay, we are a small economy. You know, it takes time that this kind of standards start to apply for us. You know, it takes some time. We try to buy some time, but then I realized this time we're going to be different. So, okay, what I did. Oh, okay. I'm not managing this kind of things very well, so apologize. So I just want to share one more recommendation with you, and all of this recommendation comes out of discussion of our PO Development Advisory group members. So, and another is something what we do anyway, but I already mentioned, and I think it's very important to don't forget for that, and it's a timeless. You know, it's a question of collaboration with everyone. It's okay, I don't know what, I didn't do it this time, okay? I don't know, someone else did. So no matter is, okay. So we need to partner this time, and we need to partner strongly. That's basically the message. So can we move to my first poll question, and please answer. I would like to learn more from you to understand, because this 80%, this was a great what I see in a level of on results on the survey. So the question basically is, have you attended any training, but really training on sustainability related reporting to date? At least say B after this 3 days, I hope. Please. Okay, John will do C because he wants to do opposite of all of us. That's fine. No, he always wants to say different from the group. He doesn't have a QR code, and his model is not applying to this, so. Okay. Oh, excuse me. So, okay, 29% yes. Oh, that's great result. But 71 is planning to do so. Thank you so much for sharing this with us. Okay, something happened with slides. I'm sorry if I don't follow the slides very well. I don't know. Something happens. So I know all of us, and sometimes we are thinking, okay, what we should do. We're thinking what to do, and we're thinking like, okay, what we need, perform a gap analysis. It sounds simple, but in reality it's not simple. We are all aware, especially people who are specialists in education. But why we should do this? First of all, I think we should admit to ourselves that we don't have a matter-related expertise in this area. Mostly, some people have. But I think it's very important that you start to think about that, how you will perform a gap analysis and comparing your existing competence framework and curricula with emerging requirements. I think it will going to be good exercise. Why? Because you will realize through the gap analysis that accountants already possess so many skills which are very relevant in this area. And it also will help you to develop everything what you need to do after in the steps of delivering for your members. But I think most important, we need to be honest to ourselves. We know what we know. We don't know what we don't know. So, but I would like to go to the next question, please. Okay. In your view, how prepared are accountants in your jurisdiction for sustainability-related reporting? Please. Yeah, I'm D also. Thank you so much for sharing. I hope everyone had a chance to share with us. Yeah, let's go back to presentation. Thank you. It's 7th slide. Okay, so we said this is the boom will take most time and effort. And but I'm just having one suggestion. What we learned from our other colleagues from the group. Some of them suggested, and I want to share with you because I'm thinking that we can do the same thing. They're thinking that they start a CPD sustainability reporting related CPD, and they're thinking to introduce the mandatory for all members. So maybe it's a good idea because I don't know, in my country we're going to work. I don't know for you, but if we introduce mandatory, we have a more chance that all our members take sufficient time and to develop their competences in this area. There is one more important thing, what I learned from my colleagues from the group. For all of us here, it's clear now that things are changing very fast and that the way how we do business has changed already. So, but there is one thing what I believe it's very, very important is not just to introduce sustainability reporting course or different trainings or different kind of education. I think it's very important that you as an organization be clear why this is important. You know, we do need to help to our profession to understand why this new type of reporting is critical. I think this is a very important step because, as I mentioned in the start, as still many of our members are not convinced that this is something which is so relevant to them. And things are slowly changing, but I think will take a lot of effort. So I believe that this is very good suggestion that we do that very clear from the start and explain them that everything what's happening goes beyond the financial reporting. And, you know, when I talk to people in the region and our colleagues, when I say the profession, we always, you know, it's a different logic this time. What I used to, it's like I'm shareholder focused, you know, in our everyday job. And then you understand this time is a stakeholder focus and it's changing the logic and we will need to invest a lot of time and energy. But I think it's very important that it's very clear to our members why this is relevant for them, no matter in which sector they're engaged. I will share a couple of more things with you. We are all aware that, you know, when we are developing those programs, what is always the problem? When it's a new topic, it's always difficult to develop so many practical case studies, you know, things which can really help to people, to participants to better understand. So, and, you know, still we are not so sure about, you know, what is important, that we offer them something what reflects to the reality. And what I learned by now is that the big companies who already start developing and they already publish some of their reports can be very helpful to this. You know, they can help you to share some information from their knowledge and how they were building up their teams. So the feedback, that's my next message. We are all aware how much is important, especially when we are developing the new programs. And we are very much aware that when it's a totally new topic or something, you know, and this time is a huge shift, we need to do the feedback all the time and need to change the things like continually. So just to remind you on this, what we already do in this educational cycle, but just, okay. What's going on? Okay, no, we go back. Okay, I don't know what I did. Okay, I told you guys I'm not good with this, but I have a couple of things more. Okay, I think I have, yes, let's try with the next poll question, please. So basically the message here is we all need to be together on this journey, but I would like to learn more from you. So No, this is not the next poll question. The previous one, please. Okay. Previous one? No, the previous one, please. No. This is the question. Which stakeholders are most important to ensuring effective education? It was not done. Yeah. Huh? Which stakeholders are most 11th? Okay. Yeah. Please, which stakeholders are most important to ensuring effective education on sustainability related reporting? Please select only one or more in case, but just one or two, 3 maximum, because I'm very likely to really just prioritize to see in your jurisdiction. I cannot see here. Oh, I can see here. There is no. Okay, it's very interesting. I would love to know exactly more about this, but unfortunately, we don't have time. So thank you so much for sharing this. But basically, it shows what was the key message, that we are on this journey all together. So I will just make the summary of everything, all recommendations, what I hope will be beneficial for you. So, as we said, I believe this is very important. Let's do the quick wins. Let's start with education. Don't wait for the standards. Let's do everything what we can to make, to succeed it in this multi-stakeholder activity. We said that we discussed about this for the last 3 days, that, it's time to take action and now. So, as I said, I don't know for all of you in this room, but most of members in my PO and my region also doesn't have the subject matter expertise, and this is very important for us to be aware right now and to work with the people who can really help us in this area, or just to invite them to join in our teams. So upskilling as one of the key words. So don't forget when you start developing this, don't think about aspiring professional accountants only. Please have in mind your members from all sectors. And like we said, this reporting revolution is going to ultimately affect everyone. This will not going to be one more compliance exercise. This time, this is not like compliance issue. This time is commitment issue. So I think it's very important. And, in the end of the day, what drive the changes? The capital flow. And this time, investors are expecting this from us. Thank you very much.
Thank you very much, Helena. And dear colleagues, you will not believe I don't have more questions for you. We don't have more poll questions for you for today. But in case you have questions to our presenters, we still have 5 to 10 minutes, to ask those questions. Please take the microphones and
Hello, I don't have a question. Oh, can I speak?
Oh, yes, no.
Yes, it's my specialization to talk there. I would like to be there next time. Hello, everyone. I'm Edona Periuze, Head of Education and Professional Standards, and as well professor in Society of Certified Accountants and Auditors of Kosovo. I want to congratulate all the speakers for their fruitful presentations. I just wanted to share an experience with you guys, what we as a young and small country, what we have done in relation to ICT skills for our members. Despite that, we have conducted CPD trainings, we have created a separate module, which is non-mandatory, but whoever of our members wants to take it. It is for IT audit, and as well a separate one on data analytics. We have hired a consultant, IT consultant, because we as accountants and auditors didn't know how to develop those modules. So we have a person, he has done all the work, and it is around 40 to 50 hours module. There is no exam, but at the end, the participants can have a certificate on that module. We plan to do the same with sustainability reporting as well. We are going to include in our CPD programs and part of them in special modules in IPDs. Thank you very much. Have a good day.
Thank you very much for sharing your experience. Actually, initially there was an idea to ask each country table by table to share the experience, but we just realized that there are too many countries present here today and not enough time, but we will definitely do it in our next virtual events or face-to-face event, and to go through each country and to discuss each country's experience. And maybe we will have then a knowledge product based on this information. Yes, the next question, please.
My name is Haikman Atsakan from Armenia. So first of all, I would like to welcome the speakers. We have met with John and Natalia for several times, but firstly, face-to-face, I met with Sarah and Yelena. I would like to say that a year ago, we have a small question concerning CPD and examination, though we don't know each other, but I was surprised with their willingness to support us and to help us. You did it. Thank you again one more time. So my question is very simple, but before answering, please take into mind that half of participants are from academia and other parts from PAO and regulators. So if we take the lifelong learning 100% cycle, so what do you think, what part should be covered by the what percentage should be covered by the universities and what percentage should be covered by PAO? And why I'm asking, because we are now deeply involved in the cooperation with the university and we'd like to play more active role in the development of profession in Armenia.
Would you like to?
I can have a go.
Is it clear?
I can have a go. Sure.
Yeah, curricula, yeah. What percentage?
Yeah, I mean, obviously, to put an absolute percentage on more than 25% and less than 50, no, I don't think so. I think it's going to increase. I think that's the answer. The universities, I mean, different countries, different models. In the US, it's all delegated to universities apart from the last stage. And I know in Armenia, they work very closely together. A lot of faces are both university professors and in the PAOs. I think it kind of depends on who has the knowledge now. Universities can be more flexible, I think, in terms of getting different people to present courses, but it depends what the PAO does. I don't think there's a straightforward answer. I was discussing just now with Sarah, a lot of this sustainability reporting is not traditional accountancy stuff. So in the UK, I did an engineering degree and then trained as an accountant. And I trained in KPMG with people who did English degrees and history degrees and then converted to an accountant. And they struggled a little bit because their maths was not so good. But if you look at this sustainability reporting, a lot of it is words, not numbers. And that's going to be a challenge, both for if you have a jurisdiction like many do, where you have to do an accountancy or economics degree to come into the profession, are these people the right people to be doing sustainability? Have they got word skills? Have they got creative skills? And that's going to be a real challenge, and it's going to change the nature of the profession, and the different people are going to come into it, I think. So I don't know if that answered the question, probably not, but there we are. That's my thoughts.
I would also, to echo what John said, that it is challenging to put a precise percentage on it. From the IFAC perspective, we do see that PAOs are some of the primary providers of continuing professional development. We would probably expect to see that trend continue. But I think also, to John's point, is dependent on the knowledge base that is there now on sustainability reporting. We see a lot of times that PAOs can accredit training providers. So, that could also be something that PAOs consider around sustainability education and reporting as well. And they would then continue to serve as that, liaison and bridge, and help their members figure out who to go to for that education. And just to share my own personal upskilling and experience, I in 2020 took a university course on business sustainability management to learn more just about the landscape. So certainly I think there'd be a lot of interaction and collaboration between the two.
So I'm not sure if you thought about, I think we are sharing both. Now we're talking about CPD only, or your question was relating to IPD also. So I'm not sure. Both of them, I have a feeling that it's both of them. So I just want to confirm. And if I remember now, when you start talking, I think Sarah, you organized, we had a call last year with your professional accountancy organization. Yes, and we had a call. Yeah, you confirm it now. And also the Sherry was with us. Yeah. And I remember that specific IPD, let's call it, a very specific situation you have, if I may say, remember now I remembered. But I just want to tell you, this is what Sarah suggested. When we start to develop the CPD system, we understood that it's very important that we have, as many different stakeholders than is possible on the market, because in the end of the day, it's a question of quality. So, and we made it something so-called, let's say, accredited system, but it's not, we don't give the accreditation. It's like a call which is issued every year. So all providers are actually sharing the information about many things, what they need to have to be able actually to provide high quality CPD to our members. And also, after that, they need to, to share their specific program for each of the CPD, each CPD program must be very specific later on what they share. And every time we, there is a specific committee which do the assessment of every program. Because I think it's very important to have on two levels. One is an institutional level, and another is on a program educational level for each of this, because this is the way how you keep quality. This is what we learn right now. And this assessment process is very important because it helps us to develop like high quality educational providers. Actually our members are definitely benefiting from that. So maybe this system to have on two levels is something what we learn by now that works well for our members, and they are highly satisfied. Now we are actually a small PO. We have more than for this year. We have about 100 programs. Yeah, but we stimulated with this system. We didn't have, to be very clear. It was very old-fashioned approach. So maybe this is what she suggested. Maybe also when it comes to the CPD, when it comes to IPD, your situation is very, very specific. We can stay until the night here, I think, discussing. So thank you for your question.
It said in one of the presentations, 15 PAOs around the world have already got sustainability certificates. courses, which take 2 days typically, or and an exam, and then you get a certificate. So 15 have already done it: ACCA, ICAW, Australia, New Zealand. So PAOs are grabbing it and they're saying ours. We'll do a certificate. So they think it's PAOs, not universities.
Rated list. So in the end of my presentation, you have a useful link, a references links. So we didn't have time to share. You have one of those links. You go through, you will see the list of all POs, and it's on IFAC website. So which actually right now providing different kind of educational programs related to sustainability reporting.
I see that we have a question. We a little bit already run out of time, but if it's very short, then let us give a chance, please.
One thing that I'm really interested to see in the future, maybe it's more than a question, because we are talking who is going to do the sustainability reporting from accounting perspective, but I think also businesses should be involved, because there is the crucial part actually is the business should prepare their financial reports with with non-financials. So we have heard now, and we have started to do training for our members, but we still don't know who is going to be the ones that we are talking now in charge to report on that. And I do believe the question was before that it should be a professional body or university or government. I think at this point, maybe all of us have a role to educate our professionals within our organization, new students, and the most important, the businesses, because I think is their major role in all this is the businesses who are dealing, and the governments who are dealing with this. So.
Actually, in that question, there was an option. So respondents could choose businesses as those who impact this process, right? But no one chose that option. None of you. So. Thank you very much. I think it was interesting and fruitful discussion. If you have more questions to our presenters, you may ask them during this coffee break. And then, yeah, so we have 30 minutes, 30, till 4:30. Thank you very much. Thank you.
Colleagues, thank you for being back on time. This is, as you know, the last session for us. I am actually mentally already in the dinner, but this is probably the most important session of the day, because what we want is discuss with you what is your expectation, what are your concerns, what are your priorities that you would like us to cover and discuss within the next 2 years. Basically, as you may know, the PULSAR program has been extended for 2 more years. The original closing date was December of this year. Now the closing date will be December of 2024. So we have 2 more years to organize whatever we want to organize or whatever needs we still have in this region. There will be a short presentation, joint presentation for both FinCoP and EduCoP, which will guide us a little bit to the topics that we want to discuss and get your feedback. But please think what works, what doesn't work, what we should do more, what should we do less, any specific topics for discussion of the next workshop, which hopefully will be in person, face-to-face, somewhere in May or June next year. The venue, any countries that would like to host the workshop, we would like to do it in a country rather than here again in Vienna. So we're open to receive any proposals. Jose, anything to add on your end?
Well, yes, thanks everyone. It has been a
hard journey these 3 days to keep all of us with attention, but I'm really happy to see that everyone is still in the room hearing. As Dimitri mentioned, this is one of the most important sessions for us because we've been working a lot in trying to hear the beneficiaries' voices when we prepared our work program. And in this case, having all together in the same room, being FinCoP and EduCoP together, it was a great opportunity to show you how we see the priorities and needs and to hear from you whether this vision that we have, it's accurate or whether we need to change it, and also hear what's working well so we can do that more, and what we need to change. So I hope that that we will have a very fruitful discussion. Thank you.
Thank you, Jose. We will start with discussing FinCoP work program first, but before that, a couple of administrative announcements. We send you a survey with some specific questions that would also help us to shape the work program for the next 24 months. So please respond. So far, we got only 3 responses, which is obviously not enough. And also logistical announcement for the dinner tonight. The buses will be ready starting at 6 and we'll leave at 6:15 sharp, both buses. So please be in the lobby by then and don't be late. All right. Colleagues from FinCoP, you may remember this list of priority topics that has been identified from the beginning. At the end, I added some additional topics that we have been discussing in previous occasions, and even today, like for instance, accounting for SOEs proposed by David, the role of supreme audit institutions. So this is the universe of potential topics for the discussion of either the workshop or knowledge products. And you may see that many of these topics have been already covered, either in knowledge products, in face-to-face workshops or virtual webinars that we were organizing within the past few years. However, there is still several topics that have not been covered so far in any format. So probably these ones that we want to focus on, but if there is any need to discuss another topic again, like for instance, sustainability reporting or fixed assets, we can do it as well. This is some general ideas for the activities that we can do during the next 2 years. Definitely the 7th workshop, as I said, probably in May, June, face-to-face, if there is no another pandemic or war, hopefully. Knowledge products, we could continue producing some papers on specific technical topics. We are working on the PULSE pilot, which is almost ready, and we're aiming to start the pilots in January. We have several candidates, even more. We were aiming to have 4 pilots in total, but so far we have requests from Ukraine, Moldova, Armenia, Georgia, David, confirmed? Georgia, maybe Azerbaijan, maybe Albania, anybody, any other country that is interested, please also get in touch with me and we can discuss the details. Something very important that we want to do for both community of practices is review and confirm the participants, the country representative for each community of practice. You may know that many of the colleagues that started this community of practice or both communities of practice, they are not there anymore because of the different reasons. So we want to ensure that each community of practice represented by at least 2 representatives. In case of EduCoP, it's actually 3, right? I mean,
Ministry of Finance, PAO, and academia. In case of FinCoP, it's usually 2 representatives by country, but in some exceptional cases, we have accepted up to 3 representatives. So please discuss it in your groups, even with your authorities. Let us know if you need any formal letter invitation from our end to facilitate the process and the appointment. We are more than happy to do that, but we hope that we can a little bit renew the confirmation of both groups and refresh and get some new blood as well. Finally, we will talk a little bit about the renovation of FinCoP core team. We discussed it in our previous face-to-face event 3 years ago in Vienna. However, in the process, I realized that one of the requirements that the members of this core team should have is fluency in English, or ability to speak in English, because logistically speaking, it would be difficult to get together and discuss some topics if you don't have the translation. So probably the only requirement is the availability and the English fluency to be on that team. Okay, this is the list of ideas for both knowledge products and next workshops topics. It's not exhaustive, so if you have any additional ideas, please take the microphone and let us know. And now I will ask Cornelia to run the poll. So the same tool we were using in the previous section, so please use the QR codes again to go to the app or to the web page. And basically we are going to ask you, what topics do you prefer for the workshop and then for the knowledge products? I will briefly mention all of these topics for the workshop because it's many and they could be small, and also in order to have the translation. So the letter A is legislation and regulation on public sector accounting. It's one of the original topics that we never discussed. Public sector accounting reforms and practices in subnational governments. This is option B. Institutional arrangements for the accounting function. Option C. Accrual accounting, impact on budget reporting. Option D. Accrual budgeting, advantages and disadvantages. Option E. Revenue recognition from exchange and non-exchange transaction. Letter F. The role of internal auditors in implementation of public sector accounting reform. Letter G. Accounting for provisions and contingent liability, IPSAS 19. Letter H. Accounting treatment for PPPs, IPSAS 32. Option I. The link, this is, I think, the new proposed topic. The link between public investment management and public sector accounting related to asset management. Letter J. Analysis and interpretation of financial statements. Letter K. Reconciliation between budget and financial information. L. The implication of sustainability reportings on public sector accounting. We already have had a workshop on that, well, webinar on that, but in case you want to discuss it again. The role of Supreme Audit Institution in implementation of public sector accounting reforms. Accounting for state-owned enterprises. Right, David? Or there is any, the definition is fine?
Let's go probably now, first priority, then second round, second priority, third round, third priority. Then we can have 2 topics.
Okay, let me take a picture of that, then we will refresh and do it again.
this is just announced.
This is first priority, and summary is accrual accounting impact on budget reporting and analysis of interpretation of financial statements. Cornelia, can we clean the results and run this slide again?
For the second priority.
Mm-hmm. We need to show it again, and people will vote again the second best option. Okay, okay. Please choose different options. Again, we have accrual accounting, impact on budget reporting. Only one. This is the second round. So yes, only one, second option.
Priority, because you selected the first priority, now there will be 3 rounds. Now you are selecting your second priority, there will be another one to select your third priority.
So don't choose the same one. Не выбирайте ту, которую выбрали в первый раз. Sustainability reporting, revenue recognition, okay. I think the trend is clear. Do we need a last round, or this is enough? We have like 4 or 5 options for now. One more? Okay, Cornelia, once again, let's start from the beginning. Yes, I choose the picture. Choose a третий вариант, который вы еще не выбирали. Все. Your third best option. If you want to suggest any new topic, please also do it verbally. Thomas? Okay, so sustainability reporting and revenue recognition again.
Microphone.
Where is the question?
Yes, in this table, there's a question.
Are you sure?
Yes, you had a question, right? Yeah. Suggestion. Yeah.
Mm-hmm.
The microphone is coming. Yeah.
Okay, one new suggestions for a new topic, maybe forensic accounting and anti-corruption or fraud examination in that area. Because in each country in this region, anti-corruption and fraud examination is of high priority right now.
Maybe one more. And one more idea, maybe related with digitalization, because we are facing the same problem in this environment. We don't have enough resources for this process, which is very expensive. So how to digitalize, to make this process to go further and to improve in this part the work of the public sector institutions.
How to digitalize with limited resources.
Yes, maybe that is not the best title. But however, maybe it is important to touch this issue, maybe how better to approach to this process of digitalization.
Digitalization of what exactly? Implementation of systems?
Public sector accounting, public sector accounting
process,
yes.
So implementation of
implementation in all institutions.
Financial management system,
yes,
right?
Yes.
Artificial intelligence.
Yes, big data. Public finance.
If I may, yeah.
In my opinion, the first session, which was dedicated to consolidation issues, was very interesting and very important. And perhaps I will express the opinion of most of participants here that we need some further discussion on this topic, consolidation issue, because I'm representing Ministry of Finance, and for me, there are some components of this issue. First one is a methodological issue, which was rather discussed today, but I think we didn't touch the issue that many problems related to consolidation can be automatically solved when public sector organizations, let's say, maintain their accounting in the same system. And perhaps some eliminations of intragroup transactions can be made automatically based on analytical data of each transaction. The second part of this issue is organizational one, because we didn't touch the question how accounting function should be organized. I see that there was a topic related to that, but it's also very important because centralized version, decentralized version, it changes a lot, and we should take into account this issue when going to consolidation of financial statements. And also there are some assets which were mentioned today that are specific to public sector, for example, heritage assets or natural resources, and their evaluation is another challenge that we should overcome in order to prepare good consolidated financial statement. So my suggestion is to go further to this topic and perhaps divide it into small components and address them. Thank you.
Thank you.
These are important in our next survey iteration, right? Because we are...
Right. I think for now we have a lot of good ideas. Some of the topics you mentioned, Rafi, they were already covered. For instance, heritage assets on natural resources, but probably it would be good to have a specific session on these two aspects. And as Ross mentioned, the IPSAS board is still working on the, for instance, guidance for the natural resources. The work on heritage assets is a little bit more advanced. So definitely we could discuss that at some point. The topic on the institutional arrangements for the accounting function is here. I don't think it received much interest, but I will check the other rounds as well. But basically, it's one of the original topics we always had on the list, and we probably should discuss it at some point. In terms of the IFMIS implementation, system implementation, you may remember that one of the previous workshop in Switzerland and Winter Tour was mainly discussing the IFMIS implementation and use of chart of accounts. We may repeat similar session, and we can probably extend it a little bit to the topics related to digitalization, use of big data, artificial intelligence, and everything related with this technology. And consolidation, as some of the speakers this morning said, we could spend a week discussing the consolidation. So probably we can repeat this session at some point, maybe a virtual webinar. But let's try first at least cover all the proposed topics, because there is some topics that we never discussed, especially when we talk about the workshop, because we have this chance to discuss it face to face and have a little bit more time rather than during a webinar. Right. I think that's it. Okay, thank you for your ideas, colleagues. Let's proceed to the next poll question. It's related to knowledge products. There are less options, but again, if you have any specific ideas for the knowledge products, usually we produce 1, maximum 2 knowledge products per year. So at least we would like to identify two ideas today. We can start working next year, and then in the next workshop we can double check and see if there is any other concerns or ideas that we should consider. This is knowledge product, so paper. And by the way, there is a consolidation paper, Rafi, so please wait for its publication, and hopefully there is more answers to your questions. Not working.
Yes, on sustainability reporting, probably when if it is selected, we can put a pause so until the standards of FROG and international standards are adopted, so we can connect to the standards. The timing can be just considered.
We have several options. Others, those who chose others, could you please come forward and share your ideas? Anyone? But in principle, sustainability reporting and PPPs would be potentially next topics for the next two knowledge products. Thank you very much for your feedbacks. Can we go back to the presentation, please? This is the last slide for FinCoP. Jose will continue. However, I think it's a joint slide for both Committee of Practices. The idea is to organize a joint workshop next time as well. Probably it would be 2 days or 2.5 days, and some of the session may run in parallel, some other will be joint sessions. So this is why it's important that we have full teams representing all the countries, so you can split and take advantage, full advantage of both streams. This is the topics that we wanted to double check with you. We don't have the poll, so probably you don't need the microphone. The acoustic is pretty well, but we would like to have a clear sense in terms of your preference. So the first question is dates and frequency. The options are here going forward to have one face-to-face workshop every 6 months, as we used to do before the pandemic. And between we could continue with the webinars, 1 or 2 webinars in between, but at least try to get together physically in one place every 6 months. The other option is keep it on annual basis. What is your preference? 6 months or 1 year for face-to-face workshop like this one?
Hands raising.
Hands raising, 6 months. 2 раза в год или 1 раз в год? 2. Кто-нибудь предпочитает 1 раз в год? Any strong preferences for 1 event per year? No, okay. Venue. So as you know, so far we only met in Austria and 1 time in Switzerland. We tried to do it in Minsk, but I guess it wasn't part of the destiny. However, we would like to hear if any of the participating countries would like to invite us and host the event in their country. It wouldn't imply much work on your end. As you know, all the expenses. Batumi or Tbilisi? Batumi? June, May, end of May, beginning of June? Still cold? Everybody are comfortable to go to Batumi next time? It's a beach, for those who doesn't know. Any other options, so we can have a small competition here? No, I'm not proposing Kiev for now. Maybe next time. Yes, hopefully.
And then the final destination is, okay, let's, in any case, we will come to Kiev as well, for sure.
We will, once everything is over. It's one of my favorite cities, but maybe now it's not the time. So Tbilisi for now, and in May, June, we discuss what would be the next one.
Sarajevo?
Anyone for Sarajevo? How about Yerevan?
After Georgia, people are not quite comfortable to invite group to. They expect the bar should be too high.
Albania? Next one. Well, it's probably fine to meet once a year in Vienna, just to let our donors know that we are still meeting and getting together.
So to make the bar lower, so Georgia and then Vienna, and then we will again consider other, there will be more volunteers then.
So Batumi, Vienna, and then we discuss. And 1 year
Paris.
We discuss who
But
could be the next one.
They were
Hopefully
proposing Paris, but I don't know whether French will be happy to.
How about Spain? Madrid or Barcelona?
Yes, Madrid, by the way, Spain is quite advanced, as presented today as well. They are quite advanced in public sector.
Can we explore it?
Yes, we can. If you want.
Or Italy?
On heritage assets, Italy is quite advancing, by the way. They are
Maybe
making
Giuseppe
a major
wants to
progress, and
invite
Thomas
us.
can confirm. Not Germany. Germany is not considered as an option, neither Netherlands.
Still cash-based accounting? Okay, we will explore other options that are a little bit outside of our donors' scope coverage and the PULSAR countries, but it's possible.
Oscar goes to Batumi.
Oscar from Peru or Oscar
Yeah,
the award? Oscar could go to Batumi,
Yes.
so I'm sure. Okay, topics, we will get back on that to you, but we have a good ideas and we did a good brainstorming on the potential topics. Format duration, in terms of the tournament format, probably it would be something like that. The group may be smaller if we split in FinCoP and EduCoP. As you know, we are around 35 participants in each group, 17 total. But for the joint session, probably we would have a similar room. Duration, what is your preference in terms of specific duration of the event? 1 full day, 2 full days, day and a half, 2 days and a half, 3 days if it's not too long. 3 days, 3 full days.
3 days for Batumi, 3 days.
And the weekend. So Wednesday, Thursday, and Friday, right? Okay, and maybe a lot of social activities if it's 3 days. City tour.
It's a long list. Let's skip that part.
How far is from
4.5
Tbilisi?
hours. 4 hours, but there is a airport.
1 hour of flight, right?
There is international airport. We can fly in to Batumi. And in June, I think that we flight as well, yeah, directly.
Okay, Golis, I think I get almost all the information, at least on the workshop. Please think about the core team for FinCoP. If some of the country would like to nominate themselves, but please remember the English is important, so we don't need any translation and we all can talk in English and be executive. Maybe have 1 hour meeting every 2 or 3 months or every month, so it shouldn't take a lot of your time. We can discuss it during the dinner in more informal environment. Thank you so much, and I pass the floor to Jose.
Thank you. So it's great for EduCoP also to hear the priorities or preferences of topics from FinCoP because of two reasons. One is that if there are topics that are strongly enough, they can become a knowledge product instead of a webinar, let's say. We were speaking about different models of accounting education, for example. And the second one is because we are also engaging in the discussion from the education side, right, on all of these topics. So in the case of the work program ideas for the next year in EduCoP, we continue to plan webinars and face-to-face events, and we will agree with FinCoP on having this biannual meeting in the next one in Batumi. We can discuss the details, but I think that it's perfectly feasible to be all together in the same venue and have some joint sessions and some parallel sessions as we did in the past. So I hope that all of you are in agreement from the EduCoP perspective. Then we are also working on some knowledge products. In our case, the way that we are deciding on the topics is through the surveys that periodically every EduCoP member fills out, and through the let's say periodic meetings with our core team that we call the resource team. By the way, the current tenure of the resource team, the one that we have, ends in March. So probably before March, we will also invite members of EduCoP to join the resource team. As mentioned by Dimitri, our limitation is that for this kind of discussions, it's really important that we do not have to do a lot of arrangements regarding translations. So if there's in the teams, normally there are people that can represent the organization and can discuss in English, and that helps a lot in this let's say very frequent and informal interactions, right? We are not taking decisions, but we are testing the waters to see whether our ideas reflect the priorities. The next knowledge product that we will develop is based on two webinars that we did this year that were discussing the different models of public sector accounting education. We had two cases of the Western Balkans, Albania and Georgia, and we presented also two cases from Africa, South Africa and Zambia, and we also two from Asia, Philippines and Vietnam. So we are putting all of that together in a small booklet, so there's a way to compare how public sector accounting education is done in these countries. This information was gathered in our surveys, which are the topics for next EduCoP events. As I mentioned on Tuesday, the implementation of international education standards it's getting a lot of traction, and we are trying to see how to best support that. And also these events, these are topics that we have discussed that are jointly with FinCoP to be organized, right? Because our accrual accounting, the impact on budget reporting, advantages and disadvantages, revenue recognition. So most of these topics were also mentioned as priorities in the prior session. So as I was mentioning, PSA education models, that's one of the knowledge products that was decided that will complete. We are also thinking of sample curricula, integration of ICT and professional skepticism, these two elements of international education standards. into PSA education programs. Of course, sustainability reporting, as you can hear, FinCoP and EduCoP are really prioritizing the same way because they are responding to the reality, right? What we are hearing from the accounting profession and from the world right now. And we can always discuss on other ideas, and we will launch our next survey probably early 2023, so we can validate most of these ideas. So we are glad to hear from you any other thing that it's not on our mind yet, but don't worry if it doesn't come to mind right now. We have this periodic way of gathering your feedback. So thank you very much, and back to Arman.
Excellent. Thank you very much, Jose, Dmitry, and thanks to all our team. Just I would like to make a few closing remarks and just to take a stock what we have done for today, because last 2 days we covered. First of all, we finally met each other, and I can see the emotions and just physically connecting, and we can finally face-to-face to share, because on virtual environment it works, but not that effective, as we can all see. And that's why there was a demand for twice a year, every half a year meeting. So what we have done today, we were talking, even before planning this event, we're thinking just to go for Friday, just to have also Friday event, but with what 3 days will be quite heavy. Let's leave the people to take some breath. So today we started with consolidation, and we discussed about IPSAS 35, and critical question is about controlling and assessing how do we control. And for consolidation purposes from the IPSAS regarding rights to variable benefits and ability also to affect the nature and benefits. And on GFS side, we discussed and we were trying to see how to approach that. On the GFS side, it was about line by line plus elimination of intersectoral. It's about stock and flows, and here we were looking into the scope of the institutional unit, and we discussed about what institutional unit mean from the and with focus to economic territory. And we're also talking about government units versus corporations, and we discussed that in quite detail, trying to connect IPSAS and GFS where we have a realignment. And we also heard quite positive development on IPSAS board side, so they are going to consider current value just as a basis for, so at least on valuation basis there will be alternative provided by IPSAS potentially, of course. We still, Thomas would think that it's not there yet, but let's see how further we can go on that one. And also there were a lot of focus on the tools, and it was also mentioned as a priority how we can develop those tools with limited resources, but it was about IFMIS as an automation. It's critical for consolidation. Without IFMIS or advanced tool, digital tool, you may not succeed with consolidation. And chart of accounts, multi-dimensional chart of accounts, which is critical. And also very good from Sacher reflection is that reliable accounting data is more reliable, and accounting data provides a good basis for statistical reporting as well. So it was also important on materiality, which sometimes we forget to take a note of materiality, and materiality makes our life easier, which should be considered for consolidation. The PULSAR team presented a paper on consolidation, and we have also learned from country experiences for country, and there was quite a good discussion. On European public good, we have also heard today that it's a bit it's quite a heterogeneous environment in Europe, and it's very important to learn how EPSAS project succeeds, and we're closely following up on EPSAS project developments, because these another way affect or impact our countries as well. and this is also was very important to talk about. It was discussed about the big picture for government policies, just to have big picture, and here where assets, liabilities, and risks are playing a key element, as Thomas also indicated. So, and of course, it's about a lot of talk about government business enterprises, as we used in the past, or SOEs, as we call them, corporations, how to consolidate, and quite a good discussion on that side. These were quite intense, and we, of course, we will incorporate and share. On education, I think we heard 3 words consistently. That was about the current one, is about IT data analytics, 1. And skepticism as a requirement by the education standards, 2. And on future education, we heard about sustainability, which is coming as in a future perspective. So 3 key messages which were coming from the education session. And of course, the most important, we collectively shaped your priorities of work, and which is important because PULSAR is to address your demands, not our needs, but your needs. And to be so PULSAR always is there just to address your current needs, and we shape them, and we have very clear priorities to organize events for FinCoP, EduCoP, and even location. And thanks a lot to Georgia just for welcoming us, proposing to welcome us next time. So by then, I think we are done, and I would like just to use this opportunity to thank all the first participants who joined us. And traveled and expected, because 3 years no meeting. I would like to thank our speakers who traveled a long way just to join us to share, because this is the respect, the trust, and the contribution which you have to the PULSAR program, and that is very much valuable. And all the panels which we had today, they were brilliant, very professional, committed people, and a global practice was presented. I would like to thank our PULSAR team. Of course, Ivona is next room, but I would like just to note her as well as subtask leader on the awareness, Dmitry as FinCoP leader, and Jose as EduCoP leader, with all the team in background. I mean, there is a strong team working, yes, and I would go naming all our colleagues, but just for sake of time, I would like to thank you, our PULSAR team, for great work and all the support. And also the people who are sitting, I mean, there are 5 people we will not notice sitting on the back, just ensuring that all goes smooth. That is the attention they also pay to us. Thank you very much. And of course, our interpreters, brilliant 6 interpreters, they are also learning all the terminology and all the reforms and consolidation, all the challenges we are going to face. Thank you very much. Just to applause to all of you, friends. And a small surprise, actually, we went green, but somehow it was decided that let's go with certificates. And our certificates, why is that? Because we would like also to indicate CPD points, and many of you need to report your CPD points. So we have included, and these calculates also, let's check. Yes, it calculates 17 hours, including senior official workshop, ministerial conference, and this workshop you may find useful. So just to sake of time, I will announce, and I will ask Dmitry and Jose just to hand over certificates. Sorry for the surnames. If something goes wrong, I will just learn. Alketa Brace. You probably would sit here. Adriana Bunjaku. You can stand here. Yeah. Yeah, just come. Please come forward just to pick up because we will save time. Aurela Avela, Bohdan Zasadny, David Skiladze. Oh, really? Okay, they cannot hear me, right? So you are so lucky, only you are going to get certificates, the people on the other room. Okay, then we will pass it them. David Gamkrelidze, please. Diana Belaya. Tritan Fino. He's also next room. Not quite like. Edona Pergiuzzi. Next room. We need to pass the certificate. Elchin Najafov. Yes, he is next room. So he's missing his. Elman Husseinov. Oh, seriously? Firudin Sultanov. Gazment Sila. Georgeta Rusu. Gulshan Arujova. Halim Kastrati. Hanna Nikitan. Давай. Она рядом там. Нужно проверить, на месте люди. Хайк Мнацакаян. Ivana Mamic Sacher. Next room. She left. Okay, we will destroy that one. Yelena Poljasevich. Yelena Misita is alphabetically. No priorities. It's only alphabetical. Kristina Nikolic. Lele Pataraya. Levanto Dua. And Levan Sabauri. Lilia Grigoroi. Maria Uljarevich. Marina Terpetska. Mikola Bondar. Nadezhda Zaporozhyan. Nargiz Galakhanova. Natalia Zlatina. Natalia Konovalenko. Nazim Kazimzadeh. Later on. Nisret Kosa. Yes. Rafi Alexanyan. Razim Garayev. Sehija Muchkanovich. Sinisa Mutic. Svetlana Tokareva. Svetlana Zubelevich. Tariel Chulukadze. Vusala Gurbanova. Yevgenia Feschenko. Zorita Lazarevska. Zurab Tolordava. And Edward Vachtangishvili. If somebody didn't get your certificate, I see many people who didn't get certificates. We are going to check where are your certificates. John Hooper, Dmitry didn't get one, Jose didn't get another one, Thomas didn't get one, I didn't get one, so Ludmila. These are special ones are coming to. Yes, we don't want to make it public because this will be like golden plated frame. So no, for those who didn't receive it, they are golden plated. How it's gold. So we don't want to make it public. Yes, and Sache as well. I mean, you will get your. Irma is already typing. Just. Okay, Irma already took the notes, so we have all the full names and the golden plated with frame, you will receive that as well. In any case, these are hard copies. You are going to get the same with PDF file electronically, but this is just many people are back to the office. They would like just to put on the wall, so they will say we were there. It's not only virtual, but we were physically there. So you will get it.
What happens in Vienna stays in Vienna, right?
Yes, and what, as Jose says, whatever happens in Vienna stays in Vienna, in this room. Okay, thank you very much, friends. You need to be back at 6 Georgian, Armenian, Azerbaijan time, 6:15 Austrian time. The bus leaves from the entrance, okay? See you at 6 o'clock downstairs. Thank you.
Thank you very much, everyone. Большое спасибо.